Before you risk a single dollar in the first market, I want you to understand something. Trading is not about luck, signals, or you're trying to use some magical strategies to make money from the market. No. Trading is about knowing the system, understanding the market, and also learning on how to approach the market very well in order for you to make money from this market, guys. My name is Philip Joshua, and I've been trading the market for more than 3 years now. And in the course of these 3 years, I've been able to win a lot of trades. I've been able to make losses too. I've made mistakes, and also the emotional part. I've fallen into this path many times. And also the best part of it is that within these 3 years, I've been able to master the market too. And now I trade like a professional because I know what works and what doesn't work in the market. So in the course of this video, I'll be taking you from a complete beginner to that trader who can analyze the market, identify good setups, manage risk, build a strategy, backtest it, and also execute trades with a lot of confidence. So we're not going to skip the basics. Stay with me from the beginning of this video to the end of the video as I get to show you guys the exact process to trade this market and make money from it using my own trading plans. So if that's what you want to learn the market, don't forget to do what? Hit that subscribe button right now, hit the like button, pick your book right now, pick your pen also, and watch the video to the end so you'll be able to understand this perfectly and start making money from it too, guys. So let's get this course started. So now they are ready to learn and know what this forex trading is all about. We'll first of all start from the word forex. Then we get into trading, then other things in the market too. Because there are a lot of things to learn in this video, and if you love yourself very well, you're going to stay to the end. Now to grab this knowledge that can be sold out for more than $1,000 for free, guys. So let's go. So what's forex? Forex means foreign exchange. That's just the shortcut for foreign exchange. And when it comes to trading, what's trading to you? If you look around, you know that every day you get to trade something for another thing. So it's just like you buying and selling something. Just like, for instance, if you go to the market, you're going to give out money in order for you to get whatever you want to get in the market. And when it comes to this now, you have to trade an asset with your own money in order to get your return based on your own level of knowledge in the market too. For instance, let me use another layman example again. If you go to the airport and you want to travel from this country to another country right now, you have to exchange your money to the currency of the people in that country that you want to travel to. Like someone that is staying in Nigeria like me now, if I want to travel to the UK or if I want to travel to the US now, I will have to exchange my Naira to US dollar, so I'll be able to use it and get things in that place too. So that's how it works when it comes to trading too. You exchange your own currency to a higher currency in order for you to trade the market and make money, guys. And when it comes to trading, we have two parts of trading, which is the currency pair part and the synthetic part. When it comes to this currency pair part, you get to see things like JBP USD, Euro USD. You'll be trading different countries' currencies when it comes to you trading the currency pair. But when it comes to the synthetic indices, in this part, you don't have to trade any country's currency in order for you to make money in this place. It's just like the broker giving you their own pairs. Then from there, you'll be able to study those pairs and make money from it. So that's all about trading. It's just all about buying and selling, using the right information too. Because when it comes to this part, information is money, information is power. If you don't have the right information, you're going to lose a lot of money and you're going to call this scam, which is not a scam because people are doing crazy figures from it. And I'm also making some good figures from it also. Yeah, I'm not doing crazy figures of now, but I'm doing some good figure, you know. So let's move on to the next thing that I have to tell you guys when it comes to this trading too. So right now that you know something about this trading of a thing, you have to also know the things that you need in order to start this trading. I know you see a lot of people with those big monitors or big screen, whatever, but you just be like, oh my god, I'm not going to start this stuff until I get to, buy these things. But no, bro. With just your cell phone, any phone at all, whether an iPhone, Android, you can use it and start trading and you start making money from it. Also, if you have a laptop, you can start with your laptop too. If you have a big screen, you can just connect your phone with the screen and you'll be able to see things in a bigger place. Just like you see people using big screen, using monitors, laptop and other stuff. It's just like them trying to see the market in a bigger view, When you're seeing the chart from a big screen, it will look more bold to you. But when you're seeing it from a phone, it will look a little bit smaller. But still on that, I started with my phone, even though my laptop is not here right now. I started with my phone and I still trade with my phone every day and I still get to make money from the market. So it doesn't matter what you're starting with. You can start with the phone. From there, you start making money from the market. You get a laptop for yourself. If you want to upgrade to that point whereby you have to buy a big screen or whatever, you can do that too. It's just like you're trying to get a bigger view of the market on a bigger surface. That's why people get upgrade and get those things too. So apart from this device part also, you also need a trading journal, which is just like all this exercise book that you use to write things out, a journal. You know it already, then you'll be able to write the things that you get to say in the course of this journey, because a lot of things are going to happen. Yes, a lot of things are going to happen. And the more you'll be able to jot those things down, so you have to avoid them in case of next time, the better you become in terms of you trying to analyze the market too. I have my journal also. I write a lot of things that I pass through, especially in my beginner phase. Even till now, it's just more like me trying to write how much I make and how much I lose in the market already, and some little more experience that I just get to experience in the market too. I write them down, so I don't have to repeat the same cycle over and over and over and over again. So that's the work of a trading journal to you. And also the third thing that you need is a MetaTrader 5, which I'll be showing you guys the other step or process in order for you to get this MetaTrader 5. Then from there, you'll be able to trade with it, because that's the trading app that we use to trade the market and get to make money. Other people might use DreamView, but here we use MetaTrader 5. So you're going to download the app right now and follow up with the video too, because there's a part in this course where I'll be showing you guys the other process to also set up your MetaTrader 5 app. So now that I've known this, you need somebody in order to start this trading of a thing. And that person that you need now to start trading is a trading broker. Who is a broker? A broker is just a middleman that is there for you in order for you to open an account, connect the account for you. The broker is just like your helper when it comes to this trading. It will help you in everything, connect with the right people, and from there you start trading too and start withdrawing, making money. And also, if you lose money, it's gone. But if you get to make money and you want to withdraw the money, you will need the help of that broker in order for you to withdraw the money from the market too. So that's the work of a trading broker. And without this trading broker, man, even you and your money is useless. So you'll be needing a broker when it comes to this also. And I'll be showing you guys the best trading broker that I've been using for more than 3 years now, and you have never seen me a day come online to come and complain about anything, bro. No complaints. I'm happy with the broker, and I will also show you on how to open an account with them, so you'll be able to trade with them also and get to make money. They're not gonna seize your money. Everything is very, very fast when it comes to this broker. Although the link is in the description or the comment section, but I will show you guys on how to open it using the exact process that I used when I was trying to open mine. So I'm gonna show you guys for free again. Let's go. Alright, so since you know that there's a broker when it comes to trading too, there is what we call assets in the market. Assets in the market is just like those things that you trade in this market now. Just like someone goes to the provision shop and he gets to buy biscuits, sweets, a lot of those things, candies, for the person to sell in the market. When it comes to this trading of a thing, we have assets in the market. And when it comes to this asset in the market, these are the things that are going to trade in the market. And you're going to find this in your quotes. But that's something that I will explain to you guys too when we come to that part where I'll be explaining the MetaTrader 5 for you guys. So these assets are just like those things that are going to trade in this market. Assets like JBP USD, SAU USD, which is gold. One of the most popular assets right now that a lot of people are going into because of its volatile nature. We have silver, we have JBP USD, Euro USD. A lot of those USD are very, very good too. They are there for you. And when it comes to the synthetic part, we have step index, volatility index, and drop index. We have a lot of them too. And I'm a big fan of the volatility index and also step index. So I'm going to show you guys there's a process to do the same things in this market, so you'll be able to know them. Alright, so there's something we call lot size in the market. And this lot size is what we use in order to measure our risk in the market. For instance, if I want to risk $5 to make $50 in the market, this is what we use to measure it in the market. We call it lot size, which I will explain also when we come to the MetaTrader 5 part in order to explain this too. So let's not make this introduction very, very long. Don't forget to do what? Hit that subscribe button, hit the like button as usual, and let's go straight into the first part, which is how to use the MetaTrader 5, which is the app you're going to use when it comes to this trading, guys. Let's go. Alright guys, so I believe a lot of you are using your phone to watch this, and a lot of you are going to use your phone to trade also. But for people that are using your laptop or whatever device you're trying to use, I'll be mainly focused on teaching people that are using their phone right now, but you can still apply the same thing and get to do the same thing in the market and make money. So when it comes to trading, the first app that you need to download in order for you to get access to the market is what we call MetaTrader 5, or I have it already. Look at it in this place.
And let me show you guys how to do it. So if you're using an iPhone, you go to your App Store. If you're using an Android phone, you go to your Play Store. So when it comes to your App Store right now, you're going to tap on it and you're going to search for MetaTrader 5. So MetaTrader 5 right now, we have MetaTrader 4, but I will always advise you to go for MetaTrader 5 because MetaTrader 5 is better than MetaTrader 4 when it comes to trading now. So you're going to tap on it right now and you're going to press on download. You get to download the MetaTrader 5 app on your phone. So after you're done downloading the app right now, make sure it's this one that I'm downloading. Don't go and download another one. So you're going to press on open. Because I have it already, that's why mine is telling me to open. So I'm going to tap on open right now. And here we are in the app, guys. So on this MetaTrader 5, you're going to see the first place, which is your quotes in the market. In this place above, we have the quotes. That's where you see everything or every asset that are trying to trade in the market. And when it comes to you trying to trade assets in the market, in case I'm someone that trades the currency pair right now and I can't find GBP USD, or if I'm someone that trades only gold and I can't find gold right now, there's a place to find these in these quotes. So let me show you something also. You can see this 4 column around the side. This is for you to use it and reduce it a little bit so you can see the byte, the hours, and the day. But I don't think it's that important. So if you just tap on it again, you will get to see it properly, just like the way it is right now. But on this side, you'll see something that looks like a pen also. So you're going to tap on that stuff that looks like a pen around the side. And when you tap on it, that's when you'll be able to add another asset or get to remove another asset in this market. So for instance, if I want to add gold right now, SAU USD, I will tap on it. So since I've been able to tap on it, that's it, I've added it already. And if I want to add another asset again, let's say I go for something like GBP USD, I'll tap on it also, and that's all for that also. So let's go back to our main place, which is the first place where we came from before we tap on that pen sign. So we're going to go back to that place right now. You can see gold right now, and you can see GBP USD. So I've been able to put it right now. And one thing about deriv is that you can use deriv to trade all the assets in the market. You can also use it to trade crypto. In case you want to trade BTC USD, Ethereum, everything is here for you. So you don't have any other thing to, go about worrying about. Use the link in the description or use the link in my comment section and open an account for yourself so you'll be able to start up with us immediately. Or if you want to follow the step 2 and get to do this thing I'm doing, you can open an account right now while we proceed with the tasks also. So on this place now, you can see that we have a lot of assets. And if I want to delete them, I can just tap on everything and get to delete them. But if I want to remove some, I can just tap on this gold, tap on GBP USD, press on this delete sign around this place. Then once I tap on this delete, it's gone forever. If I want to add it back again, I'll still search for them and get to add them. And also we have crash boom indices in this place. This is for people that trade boom and crash. We have a lot of them right now. It's not like before that we have boom 500 and boom 1000 only. It has a lot of boom and crash indices right now. The market is growing, And also we have when it comes to volatilities also, we have a lot of volatilities in the market right now. I'm just trading 4 out of 25 and that's what I want to trade, So we have a lot of them right now. You can also get to use them and trade the market while you get to make money too. If you want to search for that stuff, step index, I have one of 5, but it's 5 altogether. Jump index, DEX, multiple step index. There are a lot of assets to trade the market right now. It's not like before that the assets were very, very little. And Deriv is making sure that traders get to trade and get to make money. So what are you doing aside? Choose a pair that you can trade and start with it. But for me, I will always advise go for the synthetic indices because the synthetic indices are very, very good. Let me just add some currency pair also. Let me add JBP USD, JBP USD, and let's add gold too. Gold is a meta, it's not a currency pair. Alright, so we're gonna add it to now and alright, let's go. So on this part now, this is all the assets I want to trade in this market and this one I want to focus on. So since we want to focus on this one now, the next place to enter is your chart. So on this chart part, you can tap on this place for long, like tapping on one of the assets for long, just like this one now. Then you see trade, chart, details, or statistics. So if you press on trade, you're going to press it trade already, but Are you meant to do that? No, because you don't know what the market is doing and you don't know what the market is saying. So you're not meant to place any trade without analyzing the market, which is by you going to the chart. So the first step is tap on it for long. Okay. Then you see chart, go to the chart and analyze the market yourself. If you're able to analyze the market, then you'll be able to make money from the market. But if you're not able to analyze the market, then why do you want to place a trade? No, you don't do that. You don't rush things. And also we have details in this side, which if you press, you get to see everything that you need to know about that asset. You get to know if this something you can trade or something that you shouldn't trade also. When it comes to synthetic indices, you can see that you can trade from Monday to Sunday, Sunday to Sunday, which says that there's no break when it comes to this market. You can trade every good day of your life. So the next step is tap on it for long again. You see statistics. So on this statistic, you can see everything that's been happening in the market. You can see the bid, you can see the ask, you can see the bid low, the bid high, you can see the ask high, ask low, open price, and close price. You can see everything right now. And you don't really need those things. Let's be very, very sincere with ourselves. So the next thing is to go to this place where we have charts and tap on it also. So when you tap on charts, you get to see everything about the market. So at this point, you're not going to keep your phone vertical, but you're going to make your phone horizontal. So you'll be able to analyze the market yourself. And before we get into analyzing the market, I know you're still a beginner and I'm not going to rush in anyway. You can see those green candles and red candles on the chart right now. This is what we call candlesticks in the market. And the green one is for the buyers, while the red one is for the sellers in accordance to my own design. Sometimes you get to see people use something like blue and white. Sometimes you get to see people use black and white also. So whichever one that is going towards the upside is the buying candles, and whichever one that is going to the downside is the selling candles. So just like this place, the red ones are going towards the downside, that's the selling candles, and the green ones are going towards the upside, that's the buying candles in this market. And still on that, if you tap on the screen, you're going to see something, which is this place where we have M1, M5, M15, M30, H1, H4, D1, W1, and MN. So these are what we call time frames in the market. When it comes to these time frames right now, this is what you need in order to know the movements of the market. And these time frames also work with our real time in reality. For instance, like this M1 candle, every candlestick in this place forms after 1 minute. And when you go to the M5 time frame, every candlestick in this place forms after 5 minutes. So just like we have 5 minutes now real time, let's make our phone vertical again. By 9:55, the market is going to form another new M5 candle because it's going to form after another 5 minutes. And we're going to take note of this also. This is 9:52. So by 9:55, I'm going to check this also. So you'll be able to understand that this is what works in the market too. So we're going to go back and I'm going to show you M15. So M15 also is a time frame in the market whereby every candle forms after 15 minutes. Same thing with M30. Every candle forms after 30 minutes. H1 after 1 hour. 1 hour means H. H means hour when it comes to the way it was made short in this place. H means 1 hour. And H4 means 4 hours time frame. So every candle in this place forms after 4 hours. I know you're confused to see all these lines on my screen, but no, you don't need to be confused because I've kind of analyzed this market already and I'm waiting for the market to come back to my entry points so I'll be able to strike and get to make money. And this place over we have D1 time frame in the market. This is for our daily candles in the market. So any candle in this place forms after 1 day. This candle in this place right now, let me use our crosshair, which is this sign that looks like a cross in this place. This candle formed a day before yesterday. This one formed yesterday, and this one is forming today. That's why we have every candle in this place as a daily candle, and that's the meaning of the D1 candle in the market. W1 right now, every candle in this place forms after 1 week. So today is Saturday already. Tomorrow is a new week, and we're going to see a new candle when it comes to this weekly candle also. And this place you have our monthly candles. This one forms after every month in the market. That's why you can see that it's very, very few. It's not as noisy as this other one, which is the M1 time frame in the market. You can see we're having another bearish candle in the market already. It was bullish in the first place and now we're having bearish. So that's about the M1. Very, very noisy candles. A lot of them, and people still get to use them to trade and make money. So let's go back again to our MN time frame in the market. So this is a monthly time frame. And so far so good. This has been a candle that been forming the market. which is so many months, joined together. This is a lot of years, from 2019 to 2026. These are the candles that have been forming when it comes to the monthly time frame. This is so perfect, guys. So on this other side, you can see a lot of stuff in this place too, which I would love to explain for you. If you check on that first one at this upside, this is what we call bar chart in the market. So just like the way we have been trying to analyze with the candlesticks in the market, this is what we call bar chart, and people get to use this to trade and they're still gonna make money. But I'm never gonna advise you to use this to trade because I don't do it also. I will tell you to go with the candlesticks because that's what almost all the traders use to trade, and people are making money from it. So why shouldn't you be using it? You should use it also and try and make money. So when it comes to this bar chart, if you're good at understanding the bar chart of the market, you can get a trade with it. You can see that it's a little bit more confusing, and I'm never going to advise you to go with it too. So we have our candlestick, which is the second one, which is more understandable, and you can just look at the market and say, okay, this is what's going to happen in the market. Using your knowledge as a trader too, because you cannot just come and predict because you saw the market is rising, you want to rise with the market. No, it doesn't work that way too. So right now on this market, we have this candlesticks in the market too. And the next one is this place above we have our line chart. So our line chart is just like a rope in the market. And even though it looks like a rope, if you know how to squeeze your screen a little bit, you will get to understand the move of this market too. So when it comes to this one now, you can see that the market has been squeezed and it's looking like rope, directing towards upside, directing towards downside. But people still get to use this to trade and they still get to make money with their own understanding about the market. But I always recommend you to go with the candlesticks in the market. So these are candlestick again, and we're going to go to the downside again. After the line chart, we have this other stuff, which is what's going to show us a lot of things. Also, we have Aikanashi. So if you want to use the Aikanashi too, Aikanashi looks like our candlestick. If you tap on Aikanashi right now, you go back to the chart, you can see that it looks like candlestick, but it's a little bit more scattered than our candlestick. People get to use it too and trade the market, but I will still recommend you going with candlesticks. So that is it about that part, and let's go back again to our candlestick. Very, very important for tap on that stuff. We're going to tap on that same area, but we got our Aikanashi right now. All right, we have tap on it right now, and you can see it. In case you want to set the volume of your market, tick volume, period separator, price, ask line, all those things are not that important. And I don't see any reason why I should be wasting time trying to explain it for you too. So if you want to place them, no problem. If you don't want to place them, no problem too. If you want to tap on this one, click trading, you can tap on it. But if you don't want it, you can be doing everything manually by yourself and be pressing every trade like the way we used to press it before. And the way we used to press it before is you cannot just tap on the buy until you just buy like that. You have to tap on the buy, press the lot size, press everything and get to buy. But with one click, you can just tap on it because I've set it before and to get buy for you and you get to make money too. So when you want to change the colors, you can change the colors into whatever color that you feel like using in the market too. But I don't see the need also. I don't see it. The color that I'm using right now are very okay with me. But if I want to change it, I can change it to another color. I can use any color of my choice. And yeah, the overall target is just make money from the market. Not just you decorating the chart and you're not getting anything from the market. It's rubbish, man. It doesn't make any sense. So we have other stuff around this side, which is the fifth one right now. It's what we call our crosshair in the market. So this crosshair is what you use to squeeze the market and show areas. If you want to explain the chart, you can use this to explain the chart for people, and we get to understand it very, very fast. And from there, be able to make money from trading too. We have this side. But I'm just trying to use it to explain the chart right now. If I want to squeeze the market, I can just squeeze again and say, okay, from this place to this side is where the market has been falling from or dropping from. From this side, the market has been very, very bearish to the downside. I can use my crosshair and get to tell you all those things also. If you want to draw your pips in the market, you can also use your crosshair. Just hold the first side, hold the second side and drag it. Use your left hand to hold the first side, then use your right hand to drag it up. You can see the points in the market and also know the pip that are covering the market. Like this first 16 points is about 0.54% of whatever you're doing in this market right now. You can see how it is right now. You can use it to find your pips in the market too. And when it comes to the downside, you can see what looks like F around the side. So this stuff that looks like F, is what we use for our indicators in the market. And when it comes to indicators, we have a lot of them. I'm sure you might have even seen them before. If you have been on YouTube for some times, you see people talking about RSI, moving average. But around this place, you can see them by yourself. Once you just tap on this plus sign, once you press on it, you can see average directional moving index. You can see Bollinger Bands, envelope, Ishimoku, blah blah blah, moving average, parabolic stars, standard deviation, zigzag, a lot of them, man. And a lot of them have different works in the market. But will I advise you to go with indicators? No, I will not advise you to go with indicators. And since I've passed through all these stress already, you don't need to pass through it. When it comes to these first ones, these ones are for trend in the market. This one is for oscillators. And this one is for volumes in the market. Why the Williams, you don't need them. Tell you the truth. But if you want to set anyone, you can just tap on anyone. Let's say moving average now. Tap on whatever you want to tap on it. Okay, done. Then you can see this line on our chart. You can see that our chart in the beginning was very, very smooth and okay. But right now you can see a line in the chart. And some traders do get, wait for the market to give them these lines. Then they'll use a line and enter the market. Doesn't make any sense. No. They're just following lines that are being formed by the action of the market. So if you want to remove it as someone that did mistake or as someone that wanted to use it before, but it's not working for you also, so you go back to that place where you pick it from, which is this side where we have this F sign. Then once you go back to that place, you tap on that moving average, you press on this place where we have edit. So you tap on this edit right now, you can see this minus sign around the moving average, tap on it. So once you tap on this, see delete, then you press on delete, the moving average is gone. So you're not going to have any line on your chart again. Your chart is going to be as smooth as it used to be before. So let's go straight to the next object that we have on this MetaTrader 5, which is this stuff that looks like a triangle, a square, and a circle in this place. So this triangle, square, and circle is what we use when it comes to me analyzing the market. And I love using my horizontal line because, yeah, that's one of the tools that I use mostly. And we have our arrow, we have our vertical line, square, cycle. We have a lot of them in this place too. So if you want to add objects, you can tap on add object and add whatever you want to add. If I want to add vertical lines, horizontal line, I can also add it. If I want to add trend line, I can add it also. Trend by angle, cycle lines, arrow lines. A lot of them are in this place. Fibonacci, you can see them in this place. Rectangle, triangle. So these are objects that we use in the market to analyze the market and get to make money. So for instance, if I want to bring out one of them right now, which I would love to bring out my favorite, which is the horizontal line. I love using it mostly because of my support and resistance areas in the market. So if I want to mark out my entry point now, for instance, if I want to enter around this point, I will bring my horizontal line in this side and say, okay, if the market gets back to this place, I will enter. These are tools that just makes us understand that we are expecting areas or places in the market to push us towards our next direction or zone. So this is the work of horizontal line. And when it comes to the vertical line also, so around this object now, vertical line. So since we have gotten the vertical line also, you're going to tap on your screen and it's going to come outside. So this vertical line is like this now. So if you don't want it to in the market also, there's a way to delete it out of your chart. And if you want it, you can also duplicate it. For instance, if you need more of that same tool or object in the market. So since we don't need our vertical line in the market, you're going to tap on it for long. And you're going to see delete, copy, style, properties, cancel. So I'm going to press on this one, delete. And on this one, where we have and we like, we're going to press on copy. So since I want this to be 2 right now, let me show you something because I'm trying to make an example for you so you'll be able to understand faster too. So on this first one now, you're going to tap on this. And if I want to change the style now, I can go to the style, change the color to whatever color I want to choose. For instance, I want to use black now. I tap on black and that's it, man. The color has changed to black already. If I want it to be dot, if I want it to be like, dash, 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 I'll put it on that. If I want it to be dot, then it will be on dot too. If I want it to be on a straight line, I'll tap on that straight line. And it's going to be on a straight line too. So I've changed the style already. It's not red like before again. It's now black when it comes to that one. If I want to tap on it for long also, I can also check the properties of that candle. And you can see the name, MT5. You can rename it to whatever you want to put it as. But do you really have that time as a trader? No, you don't have that time. So since you don't have that time to come and be renaming it, but if you want to rename it, Can change it to whatever. Let's say page line. Okay, let's say page line right now. Okay. So it's done already. So anytime I want to check for it, I go to property, I'll see page line another place. But is it important? No, I don't think it's important. So let's check out on that thing, which is we trying to tap on it again. And you will get to see cancel. That's the last thing here. So if I want to remove it, I'll just press on delete also, and it's gone forever. If I want to tap on delete again, I'll remove the second one and it's gone forever. And I'm very, very sure I've seen something that looks like an arrow around this place. Yeah. So just tap on the screen, you can see that thing that looks like an arrow and draws towards the upside. That is what we use when we want to reduce the size of the images on our screen. So that's all about that object part in the market. And we have this other stuff below it, which is what we use when it comes to buy limit, sell limit, and also buy stop and buy stop limit. We have a lot of limit in the market. So this is mainly for market execution. And for instance, if I want to put a stop limit, I can put a stop limit. If I want to use a buy limit, sell limit, whatever limit I want to use in the market, I will get to use it. So for instance, I want to buy this market on this side. Then from here, the market now buy automatically. Once I tap on this buy limit, I can place my SL below it. That's for people that are busy, that doesn't want to stress themselves that much when it goes to the chart. Place my SL below it, place my TP above, then boom. Since we're even using a demo account, let me get to place a trade right now. So once you're done with this now, press on this arrow towards the upside and you see what? Place buy limits. So when you place your buy limit at another place, whenever the market gets back to that place, the market now buy from there towards the upside. And if you want to cancel it or if you want to delete it, you can see the way I did it right now. Tap on it, then you see delete order. So when you press on delete order also, it's gonna be gone forever. Just drag it, bam. That's all. And you'll be able to remove it from your chart too. So that's all about that part. And let's go down again. You get to see something like a computer around the side. Tap on it. You can use it for the one-click trading. So for this one-click trading now, if I want to sell this market, I just have to tap on sell. And it's selling already. If I want to tap on it many times, it's selling many times. If I want to buy, I can tap on it many times or so, and to start buying as many times as possible because it is a one-click trading tool. And if I want to change my lot size, tap on the other side, and you see it. So it's from plus 0.1. So if you want to reduce it to, you can go back to this place now and reduce it. Since you have been able to find the lot size necessary for this market, which is 0.1, that's the lowest lot size on this market. If you want to increase it, press on 0.02. If you want to increase it to 0.5, if you want to increase it to 1, if you want to increase it to lot size 2. But one thing you have to know is that the more the lot size, the more the risk in this market. And the more the lot size 2, the more the reward in the market. And you should be ready that you're going to make money, you're going to lose money too. You should also be ready that you're going to risk money and you're going to expect money too. So it should be in your mind. It should always be there, bro. So that's all about that part. And what else do I want to show you on this place again? There's actually nothing to show you guys again. Also, if I tap on this stepping desk on my left hand side, tap on stepping desk, you can see a lot of assets too. You can see the GBP USD that we just added right now. If I want to trade it too, I will get to trade it because it's also an asset in the market. But this is a currency pair, which most of the currency pairs are mostly traded during the weekly days. But most of the assets here are volatile. And why do I mostly focus on the volatile pairs? Is because volatile pairs are very, very good, and with them you can make your money fast and get out of the market, man. You don't have to stay forever when it comes to using your volatile pairs in the market. And if you tap on that stuff that looks like a monitor or a computer on the side, everything is going to be gone and you will not see your one-click trading again. So since you tap on this, you can see other assets. If you want to analyze on that asset also, while you are on your horizontal mode, just press on that asset, analyze this asset also, and see what the market has to do for you. If you tap on this, you can also analyze on that asset also, and see what the market has to do around that asset. So that's all about that part. And what else do I have to show you guys on this place too? I just want to make sure that you guys get understanding faster, and let's not waste much time, There's nothing to show you guys in this place again. What else again? Okay, if you tap on the screen, you get to see indicators. In case you have an indicator, you get to see them. This is like you using the vertical side of this now. If you tap on object, you get to see a lot of those objects also. If there are objects that you want to lock, you can lock them. If there are objects that you want to hide, you can also hide them. If you want to delete everything, press on this delete now. Are you sure you want to delete all your objects? If you say delete all, it's going to remove all of them and nothing is going to be left for you also. And if you tap on it again, you're going to see settings. So when it comes to these settings, it's just like the same settings I've shown you guys before. Nothing different. This is me placing my phone in the vertical way now. And you're seeing it also. So we have cancel. Yeah, cancel whatever you want to do already. And the market is doing its things. So this sell and buy that we placed before, there's a place to find it also, which is around this time where we have trades in the market. So you can see this now. This is 10:16 p.m. and that candle is coming out already, which is another 15 minutes candle. It's coming on that side, and we have on our M1. You can see that there are other candles in this place. This is a 1 minute candle right now, pushing towards the downside massively. Here we are, M15. 150 minutes candle is this now. And on the M1 time frame, we have two 1 minute candle already, which is this bullish one and this bearish one right now. So let's go back to this place too and check out on our positions that were opened already. So we're going to go to this side where we have trade in the market. So on this trade place now, you can see we are currently in profit and we are also at the same time in loss. And why are we in profit and loss? Because we took two positions in that market, which is not proper. It's not a way to trade the market, because when it comes to you becoming a trader, you have to find what the market is doing and do what the market is doing too. So this is a demo account. You not see a withdrawal box around the side. That's one of the signs of a demo account. But on a real account, you're going to see that. So let's just play with this account while I try to teach you guys on how to do the same thing in the market. You can also create an account too using the link in my description. So you'll be able to start up with your own trading tool and learn better and faster also when it comes to trading too. So since we have two positions running, if I want to close one and leave the other one, I'm going to close one and leave the other one. And how do I even do this? If you have to take it one by one, you can tap on this now and you see close position. So if you want to close position, you can close position and boom, you're in minus 13 already. This is our first trade for today. I haven't taken any trade already. So in this place above, we have history. Whatever trade you close comes to this place. And the reason why it comes to this place is because where you have to see everything is this place where we have history in the market. So let's go back again. If I want to close all the losing positions right now, I'm going to tap on this, and the next step is to do what? Bunk operation. You can see this close position is for one. Close buy. You're trying to use one profit and one loss to close the market. So if you close it, you're going to lose something small and you're going to make something big from the market too. So you can see it now. Let's go back to this place. Here we close by this profit, and instead of us to lose $15, we lost minus $1 in this place too. So if you're trying to use your profit to close some of your losses so that you don't have to lose everything. But if I tap on it now again, you're going to see modify position. That's if you want to put your stop loss and take profit. Stop loss is what you use when you put your risk in the market, and take profit is what you use when you want to put your reward in the market. Just like this market now, the market is buying and selling like the way we have placed already. If I'm to be taking this trade right now, I'll tap on any of them and put my SL, okay? Let's say I put my SL on the side and put my take profit. Where's my take profit again? Coming. Alright. So this is my take profit now. Let me bring it back to a lower time frame too. So for instance, if I want to take profit around this side, then I'm risking how much in this market? I'm risking 27 to get 12. That's a bad risk to reward ratio. If I want to take a trade that is going to take me sometimes, or it's going to be longer, I just use this place as my take profit area in the market. And I'm going to be risking minus 27 to make $89 in the market. And if I press on it too, I will get to modify the position and the market will modify itself. So I have a stop loss, I have a take profit right now. If the market mistakenly touched my stop loss, the trade is going to close by itself for me. And if the market touched my take profit, I'm going to get the reward of the fruit of my labor. So that's all about that part too. And if I want to close all the losing positions too, I'm going to tap on one of them again. You can see where we have trade. It takes you back to trade, takes you to charts, and this is where we have bulk operation. So this bulk operation is what I want to show you guys. If you tap on it, you can see close all positions. It will close both the profit and loss, close profitable positions, close losing positions, to close all the losing positions too, close buy positions, close step index positions. For instance, if you have a lot of them, you can use these two. But what do we want to do in this place? We want to close all the losing positions. So all the losing positions are going to close right now, and boom, we're on profit right now. But the loss is in our history. In this place where we have our history, you can see we are down minus $387 because of the loss size we use also. So when it comes to this trade, if I want to close all the positions too, if I want to close all the sales in this market, I'm going to tap on it for long again, and here we are. We're going to tap on bulk operation also. I'm going to tap on close all positions. So when we close now, we have our profit back again. And when it comes to this, you can check your history for like last week, last month, last 3 months, last 6 months, last year, or customize. So if you want to check these two, you can check it for yourself, use it, and know how far with what you have been doing in the market too. So we have orders in this place, we have deals in this place. You can see them. Stay on position, very, very good for you. And what else is that again? History time. And if you want to change it to symbols only, or use the default is the best. So that's all about that part. And we have settings in this place. This is where you get to see your demo accounts. If you want to add another account or so, you can tap on this place and add an account in this side by tapping on the plus sign. So once you tap on the plus sign, you search for the broker. And as you all know, we have been using Derive SVG LLC. So once you tap on Derive SVG LLC, which you're going to find out when you open an account using the link in my description or the link in my comment section, whichever server that gives you, put a server here. If they give you Derive demo, Derive server 03, Derive server, whatever server they gives you, tap on it in this place and add your login and also put in your password, the password I used to open the account. Put it and set it on save password. But if you want to open a demo account, you can tap on this place, open a demo account for yourself. What's your name, your phone number, email. Open an account for yourself. Leverage is always 1.100. Yeah. If you need an account balance in the account, you can press on $3,000. So it will be smaller. You can press on $50,000. You can press on $1 million. They can give you as many amount you want, but they're not getting to withdraw anything from it. So use the lowest and use it to lend too. But the best option is use the link in my description and open an account for yourself. If you want to put in another broker, you can see SNES in this place. You can see FBS. A lot of them, you can search for a broker. So that's all about that part. And once you put them, you get to see the accounts around this side. So that's all about that part too. And new account, if you want to add a new account, I've shown you guys already. Mailbox, that's if they want to send you any message on whatever is going to happen in the market too, you can still have these messages. Like days where they have a weekly system maintenance, they'll be going to tell you ahead of time so you'll be able to know that there will be maintenance. Just like these messages all over in this place. These are different days of them trying to tell me that we have maintenance and I should be careful, because when they have maintenance, they might have system issue when it comes to taking trades in the market. And also we have news in this place. If I'm into currency trading, which is trading currency pairs, I can go into this news category, search for the news I want. Trade days, which is our economic calendar. It takes us to the website and we get to see them too. So that's all about that part. Chat and messages. If I want to join communities of trader in this MetaTrader 5, we get to use this to join them. But what's the need? What am I doing there? I don't have to be in a love community, because the lesser the community, the more focused you gotta be, Traders community also, it will take you to your browser, then you gotta use it and find them. MQL5, Algo Trading, you have OTP, one-time password generator, interface. If you want to change from English to another language, good and fine. If you don't understand English, you can change yours to another language. Let's tap on that language though, but let's see. So for instance, if I want to use Arabic now, I tap on it, restart or hide the application. Okay. So everything is going to go into Arabic. It's actually restart or add the application again. So I'm going to go back to the app again. And everything is in Arabic already. Okay. So how are we going to get out of this place? I'm going to look for it again and tap on it. Then we're going to go back to English. So I'm back to English again, and I think that's the same option. Let's go back again and see if we're back to English. All right. So we're back to English right now. We have our charts in this place. Whatever I want to set in the chart too, we can set it in this place. This is our settings button, like the general settings button for everything. We have our journal in this place. Whatever I journalize in the market, good and fine. We have our settings too in this place. So for instance, if you want to put in the sound, that sound I used to hear, poo, 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 wherever you want to press a trade. I don't know how to make the sound though, but you can just press on this and get sounds in the market. If you want to enable news, new languages, lock screen, if you want to read the app, user guide, storage, if you want to check how many percent you have used the app and you want to clear cache, you can also clear cache when it comes to this part too. And what else again? Also in this storage, if you want to remove some accounts, you can also remove some accounts that you don't actually need. Remove them so they'll be out of your phone so you can have more space on your MetaTrader 5. If you want to contact the developer, you can also contact them too. So that's all about this MetaTrader 5, and I don't think there's anything that I did not show you guys. So that's all about this part. Let's get straight to the next topic or the next thing that I'm going to teach you guys when it comes to you starting forex trading as a complete beginner too.
Alright guys, so the next step now is how to open a demo and a real account when it comes to you trading the market too. And these steps are very, very simple, which I'm going to make sure I describe it in such a way that you'll be able to learn it faster too and get to make money from this market, So the best broker to use in terms of trading, I'm going to show you guys right now. Let's get to this part also. So you'll be able to follow up with the process and make money from it too. Let's go.
Alright guys, so to open the trading account, all you just have to do is go to any of my videos, either the old one or the new one, whichever you want to go to, tap on it and get access to the video first. So I'm going to tap on one of my videos right now, and this is it guys. If you want to learn, so I'm going to pause the video. We're going to go to my description right now. Then if you go to my description, you see this place where I wrote, register with the best forex trading broker for both currency pairs and synthetic indices. This is a kind of a description that I was using before, but I will edit it after this video because with Derive, you can also trade stocks, commodities, and also indices in the market. You can also trade silver, you can also trade gold with Derive, guys. So everything you want to trade in the market is in Derive. So the next thing I'm going to do right now is tap on the link. Then when I tap on the link, you will see something like Chrome, Google, default browser app. But I'm going to use default browser app because I'm using Safari on my iPhone. But you can use Chrome, you can use Google, depending on the phone that you're using. So if I want to use Chrome also, I can also use it, but I prefer using my Safari. So I'm going to tap in this right now. So right now it's loading. Then the next thing I'm going to do is open account. You can see this place over the road, open account. Then I'm going to tap on it immediately. It will take you to this place whereby you put your words, country/region. Since I'm from Nigeria, Nigeria is there already. But if I'm not from Nigeria, I will get to choose my country. In fact, almost all the countries in the world are using Derive. So what are you waiting for? A lot of countries are here already. You can see them by yourself. So tap on your country and get access to Derive ASAP. So choose your country. If I'm from another country, I'll get to choose another country, but I'm a Nigerian, so I will stick to my Nigeria that's in this place. Then I'll press on sign up. If you look at this top side, you see join 3 million plus global traders. So it's not just something of me and you trying to use the broker. This is a broker that has been in existence for more than 25 years now. And a lot of people are trading with this broker. So press on sign up. Once you press on sign up, it's going to ask you to sign up with Google, sign up with Facebook, sign up with Apple if you're using an iPhone. But if you're not using an iPhone, you can sign up with your Google or your Facebook. So I would prefer you to use Google. Tap on Google now. So once you tap on Google, you're going to put your email address. Alright, let me put another email address that I have. Let me just use it to test this up so that you guys can see it also. So I've inserted that email address right now. So I'm going to continue. Alright guys, so right now you can see how it looks like. This is how the Derive account looks like right now. Then the next thing I'm going to press on is try read trading. So when you press on try read trading right now, you're going to see a place whereby you're going to fill your personal information. So after filling the first personal information, you press on next. I'm going to put my name in this place. Alright. But make sure you're using a name that is in your voter's card or NIN or anything, guys. Put the real name, guys. Very, very important. Okay, I'm gonna choose my year now. I'll use 2001 in this place. So I'm gonna use 2001 and I press done. After pressing done, Nigeria is my country of birth. Citizenship is also Nigeria also, but if you're not from Nigeria, you can tap on it and choose the country you're from. Very, very important also. Then your phone number. So I'm gonna put my phone number in this place. Now press on next. So after tapping on this next now, it's going to take you to the next step. So right now we're waiting for the next step. So the next step now is to confirm your identity. So if you want to use a driver license, good and fine, national ID, passport, whatever you want to use, you can use it and confirm your identity. So I'm going to use national ID. I will tap on national ID. Then the next thing I will do is next. Then once you tap on next now, then after the certificate confirmation, you go to the next step. The next thing you're going to do is take a picture of your national ID card or whatever you want to use. If you want to use driver license, take the picture and press on next. After pressing on next, that's the last step you need now to verify your account. So when you're done with the last step for the verification, you see the account in this place. If you check very well, you can see this is a real account and you can see the money in the account, man. If you tap on that real account, you can see demo account. So if you tap on demo account, you see money in the demo account. When it comes to the demo part, you cannot withdraw the money in your demo account. But when it comes to real account, you can withdraw the money in your real account. So I'm going to go back to real account because that's what we're working on right now. And that's what I want you to also get into, man. So on this real account now, since you have opened an account already, yours will be on 0.00 USD. Then in that place now, what you have to do in this real account, you have to fund your account. Well, before you fund your account, you try to link your account to your MT5. So you're going to go to this place now. If you look at this place, you can see Derived Trader, Derived Bot. You don't need all these ones again. You're going to go to this place where you see CFDS. So you're going to tap on this CFDS. Then you're going to go to this place whereby you see Standard. Tap on the standard and get account. Like this place now, you can see financial get account, financial STP get account, swap free get account. A lot of them, man. So if at all I did not have a drive account already, if I don't have a standard SVG account, then I could just press on get account in this place. So if you want to get an account for yourself now, all you just have to do is tap on get on that standard on your own phone right now. Then once you tap on this get now, all you just have to do is enter your MT5 password to add an MT5 financial account. So you're going to put in your password at this point. Then after putting in your password, you get access to a financial account. Then after getting access to this financial account, you tap on open. So if you tap on open right now, you can see the broker, you can see the server, you can see the login ID. So you're going to copy the login ID, then keep that to yourself. Then after copying the login ID, don't forget the broker is Derive SVG LLC. So if you're someone that doesn't have MetaTrader 5, download MetaTrader 5 on your phone, either from your App Store or your Play Store, download it. Since I have MetaTrader 5 on my phone right now, I have to just minimize my phone and go to my MetaTrader 5. So look at my MetaTrader 5 at this point. If I tap on MetaTrader 5, I will get access to this place. I will go to these settings. Then in this settings now, I have to log in into another account. You can see this plus sign in this place. Tap on that plus sign. Then the broker I go to search for is Derive SVG. So Derive SVG LLC. So I'm going to tap on it and look at it here now. Derive SVG LLC. So once you tap on it, go and check the server again to know if you're going to use the right one, because we have a lot of servers on this one. We have Derive SVG server 02, Derive SVG demo, Derive SVG server 03, Derive SVG server. If you choose the wrong server, you're not going to get access to this broker. So go back, minimize your screen a little bit, check also. You can see it's Derive SVG server 02. So copy the login ID. If you haven't copied it, then go back to that place again. Derive SVG 02, then tap in the login ID. After tapping in the login ID, you put your password. Then let it be on save password so that whenever you want to log in, just get access to the account immediately. Once you tap on it immediately, you get access to your real account. Then after you get access to your real account, you can see the difference between a real account and a demo account now. You can see this wallet sign around this place. That's one of the signs of a real account. So put that in your mind so that anytime you want to switch between both accounts, you gotta know that this one is a real account too, and I'm gonna use my real money to trade in this place. So after you have logged in your real account now, all you just have to do is go back to that same website whereby you have the account now. So you're gonna press on cancel in this place. And the next thing you're going to do now is to fund the account, because your account will be on 0.00. Fund what you can afford to risk in the market. And also, if you have a lot of money, you can put in a lot of money with your good knowledge about the market. You can get a trade. And if you don't have the knowledge about the market, you can just join the Telegram community, fund money, we get a trade together, and we make money together, man. So now that you want to fund the account, the next thing you're going to press on is this three column around this place, beside this derive symbol in this place. Tap on it now. Then once you tap on it, you see this place where we have cashier. So you're gonna press on cashier now. Then once you tap on this cashier, you can see deposit, you can see withdrawal, payment agents, and transfer. So you're going to tap on deposit right now. Then once you tap on deposit, you can see deposit via bank wire, credit card, and e-wallet. You can see deposit cryptocurrencies. If I want to deposit by myself, I mostly use my cryptocurrencies because that's the best for me, and I go with my Litecoin because Litecoin is very, very good and it doesn't increase or reduce that much. So for your own account, you might not even see Litecoin. So you see this place by the roads, add new crypto account. You tap on it. Then if you want to put TRC20, you can tap on it. If you want to put ERC20, USD coin, whatever you want to tap on, you can add it to that place. If you want to use Ripple, you can use it also. So if you tap on it, it will add to that place. Then you deposit with it on your crypto exchange app, either Bybit or Binance, whichever one you're using. Use it to deposit to these guys. So I'm okay with my LTC. So I'm going to tap on LTC right now. So once I tap on this LTC, see continue. Then I tap on this continue. After tapping on the continue, what you're going to see now is the wallet address. So once they give me the wallet address, I will go and deposit on this account. Copy the wallet address, go and deposit. Then once I'm done with depositing on this account, this 0.000 LTC will change because money have entered the account. Then the next thing you're going to do after depositing is you go back to the same place again, this same cashier. Then you go to this transfer. Yes, transfer you're going to go to now. So you press on transfer. Then once you tap on this transfer, the next thing you're going to see is from the LTC now to your standard SVG account. And from there, you'll be able to trade with it and start making money. So if you have money in your LTC now, you press on transfer all. And once you tap on all right now, you can see that there's no money in this LTC. Then everything will enter. So if I want to push money from my USD dollar now, if I write the amount, it's going to enter the same amount in my USD account. But I don't want to deposit right now because I mostly trade when I want to trade. So I don't like keeping money in my account. I don't like keeping money in my trading account. If I see opportunities in the market, I take how much I want to risk in the market and I deposit that. Then I try it with the opportunity. If it goes well, very, very okay. So that's all about the depositing part and the transferring part. So when you're done transferring, the money will reflect on your MetaTrader 5. You will see the money on your MetaTrader 5. Then from there, you'll be able to trade whatever asset you want to trade in the market. These are the instruments that I trade mostly. And if you want to add more, you can add more. If you want to delete more, you can also delete in this place also. But I'm not interested in adding anything. This is what I've been training myself to for some time now. And that's all about that, man. So that's how to open, link, and also fund a real trading account. And also even transfer the money from the app to your own SVG account, MetaTrader 5. And from there, start trading with the account and start making money. So that's all about this video right now. If there's any confusion you have, just try and go to the video as many times as possible. Then from there you understand the steps better and correct yourself with whichever mistake you have made already. So follow up with everything, follow up perfectly, and you'll be able to open an account for yourself. That's all about this video, guys. See you in my next one.
Alright guys, so let me teach you on how to read different candlesticks so that when you see them on the chart, you'll be able to know what they mean also and get to use them to make money from the market. Because in this journey of trading, you have to know the different kind of candlesticks in the market and what they mean in the market, so you'll be able to do the same thing that the market is doing and get to make money from it too. So on this one, this is our first one, which is our bullish doji candle in the market. So this bullish doji candle is the doji candle that we're going to find
whenever we want to buy in the market, just like the name sounds, bullish doji. So this one we find it whenever we're buying in the market. And this is how it looks like in case you get to see it in the chart as we move further with the video too. So let's go to the next one. So on this one now, you can see that there are two candles having the same body and two long wicks. So this body now, if it is double in the market, just know that it's a tweezer top in the market too. And this is for continual movement towards the upside. If you happen to the downside, this is for a bullish move. Let's get to the next one also. Let me teach you guys on how to use it. Tweezer bottom. And you can see it right now. I told you guys that if this tweezer top forms in the downside, we'll get a bullish move towards the upside. And if the tweezer bottom gets to form in the upside right now, we get a bearish move towards the downside. So each one has different meaning. When it comes to the down one, we have the tweezer top. When it comes to the upside, we have the tweezer bottom. So this one is telling us that the market is going to go back to the downside, while the first one is telling us that the market is going to go, or the market is going to rise towards the upside. So that's the difference between tweezer top and tweezer bottom in the market too. And this is exactly how it looks like in the real chart or on the real market. So keep the picture in your mind. As we go further in the video, I will show you guys on how they actually look like in the real chart too. So let's move on while we go to the next candlestick, which is our bearish doji candlestick in the market. So this bearish doji candlestick is what we get when we want to have reversals in the upside. Like this one that is bullish now is for us to have bullish move, and this one that is bearish is for us to have selling market. And sometimes they get to change positions whereby we see bearish candlesticks in a reversal area, showing us the sign that this market is reversing towards the upside, and we get to buy after it. And sometimes we get to see the bullish doji candlestick in the upside, trying to tell us that the market is going to sell from there toward the downside. But these two candles are forward rejection areas in the market, or areas whereby the market are going to reverse. That's where we see doji candlesticks mostly. So that's all about the doji candlesticks too. And let's go to the next one. So our next one is bearish engulfing candle. And when it comes to bearish engulfing candle, don't forget the name bearish again. Bearish is for market that is dropping, and bullish is for market that is rising. So on this bearish engulfing candle now, you can see that the candle engulfed the last bullish candle in that side. And after the market has passed it with a bigger body and little wick, then the market started dropping toward the downside again. So that's how the bearish engulfing candle works in the market. When it engulfs a candle, it gets to drop toward the downside. And when it comes to the bullish side, the bullish candle has to be bigger, while the bearish candle have to be smaller. And when it comes to the bearish side have to be bigger, while the bullish candle have to be smaller. That's why it's an engulfing candle. Let's go to the next one too. Let me show you guys on how that one works too. So here's our next candlestick also, which is the bullish Marubozu. So the bullish Marubozu is those candles that we're going to see without any wick in the market. I will be like, where is this candle from? And this is how it looks like. So when we start going deep, I'll be showing you guys on how this bullish Marubozu also works in the market. And one good thing about this candle is that if you get to find it and you enter your trades, and this candle continues with this formation without any wick, that trade is going to go well. I've used it to trade a lot of market, and it was perfect, guys. So I actually love this candle too. And this is something that I trade almost all the time if I get to find it. But it's not that common in the market. That's just the truth about this bullish Marubozu. So let's get to the next one. Let me get to explain for you, so you'll be able to learn also and get better in terms of your trading too. So this bearish Marubozu is an opposite of the bullish Marubozu, because this one is for bearish move, which is telling us that the market is going to drop to the downside. So we find the bearish Marubozu in a selling position, then we can take a lot of sales and also make money from it. But if we find the bullish Marubozu in a buying position, we can take a lot of buys and go on with the market. So that's the mean of these two right now. So the bullish one is for the buys, the bearish one is for the sales too. And here we have another candlestick formation, which is the last one on this first row. Let me tap on it too. Bullish engulfing candle, and the bullish engulfing candle, just like the one I've explained for you guys before, the bullish candle have to be bigger than the bearish candle. That's what makes it a bullish engulfing candle. I can see that this whole stuff is kind of repeated many times, and we'll be moving on with a lot of them. So we'll be explaining this bullish Arami right now, so you'll be able to learn it and know how it works in the market too. So bullish Arami candles are those candles that get to form whenever we have a very strong bearish move, then a short bullish move in an area of reversal or area of continuation in the market. And from there, the market now start rising towards the upside again. So that's the work of this bullish Arami candle in the market. And let me get to explain bearish Arami for you, which is the next candle that I can see right now. So this is our bearish Arami. And the difference between the bullish and bearish one is it's a reversal candle pattern in the market. And if you get to understand it, when you get to see it on the ratio too, you're going to make money from it. So that's one thing about bearish Arami too. Bullish candle will be very, very big, while the bearish candle will be smaller. And from there, the market now reverse toward the downside. And let's get to the next one too. I want this to be brief. I just want to make sure you all get to understand it very, very fast too. Next one on our list is our inverted hammer. So this is a hammer candle in the market. You can see that it's not as tiny as a doji candle. When it comes to the inverted hammer candle in the market, the body used to be bigger a little bit and it has a longer wick. But when it comes to doji candle, it's very, very neutral candle. This one is for bullish move in the market. If you're about to have a very good bullish move, we have an inverted hammer in the market. When it comes to a selling side, we have our hanging man. And this hanging man is for what? Sales in the market. So it's a very good bearish candle. Now, whenever it gets to form in the market, you can use it and take a lot of sales in the market and you still gonna make money. If that is the right place that is meant to come around, you're gonna make money from it. So that's one good thing about this one. And you're gonna go down a little bit. You can see evening star on the other side. Let me explain the evening star for you also. So this is the evening star right now. And when it comes to this evening star, this is a sign that the market is changing its direction, especially if the market is buying. So that's also another important candlestick that you should take note of whenever you want to trade in the market too. And we have another one, which is our dragonfly doji. Let me make it very, very visible for you too. And when it comes to this dragonfly doji, these are the doji candle that we find mostly when we want to have a very, very good bullish move in the market. So just like this one now, if we get to find this in the area or a position whereby the market is trying to rise, we enter the market aggressively, depending on the reversal zone. If it's a proper reversal zone, then from there we get to enter trades and get to make money. And we also have the gravestone doji in this place. The gravestone doji in this place is just a reversal of this other one. So for this one now, if we get to see this in a selling market, then we can take a lot of sales also and get to make money. Don't forget, the body is always small and the wick is very, very long. It's a sign of strong rejection and it's mostly found in strong rejection areas in the market. You can write it down if you're using a pen or paper. You can put it down somewhere so you'll be able to remember it also and never forget it too. So we have another candle in this place, which is the morning star. And when it comes to the morning star, just like the evening star, the morning star is for buying in the market and the evening star is for selling in the market. So on this one, you can see the formation around this place. And this is a strong sign of a very good bullish move. And from there, the market will always keep rising towards the upside when it comes to the morning star. What else do I have to show you guys again? Okay, we have 3 white soldiers and the 3 black crows. These two formations does the same thing in the market. And when it comes to the 3 white soldiers, this is mostly found in a very strong rejecting bullish move in the market. This is that kind of move whereby the market will rise, still come back, drop again, and still form another kind of very, very close to the rising one, another one again close to the rising one again, continuously until the market has been able to pass through that level or pass through that place. And from there, the market now start rising properly towards the upside. That's why we find these 3 white soldiers in the market. And these 3 black crows in the market is mostly found whenever we have the market dropping towards the downside too. So this is like the market dropping in a very consolidating or rejecting way, but everything is forming in an engulfing candle because most of these 3 black crows are in engulfing candle. Same with the 3 white soldiers. They are mostly formed in engulfing candle, but they're not going to form in an engulfing candle in the beginning. They're going to show you a lot of rejections in the market, but they will always end up in an engulfing candle where they keep dropping continuously towards the downside, trying to make sure you're confused enough in order to know what you're doing in the market and don't get to make money from it too. That's the major target. But if you're able to understand it, whenever you sit in the chart also, you'll be able to use that and make money. And yeah, that's my major target for you too. So let's go to the last one, which is our piercing line and dark cloud cover. So let's go to that one right now. We have our piercing line in this place. When it comes to this piercing line, this is like a candle formation that get formed. This is more like an engulfing candle crossing another candle in this place. So if it overcomes another candle, we're going to buy with it. And when it comes to the dark cloud cover, it's just an opposite of the other one too, whereby we get the market dropping to the downside. After getting a candle that looks like a Morozova candle, then from there we get dropped on the downside again and continuously. So that's all about that part. Let's get to the next stage in this Forex course. Let's go.
Alright guys, so when it comes to you trying to draw your support and resistance areas in the market or support and resistance line in the market, the first thing you have to look out for is the places whereby you're going to get your horizontal line. Because when it comes to support and resistance, you have to use a horizontal line to mark it out in the market. And also, when it comes to you spotting your perfect support and resistance areas in the market, you have to go to the higher time frames like the W1, the D1, H4. From there, you'll be able to analyze the market with it and bring it back to a lower time frame. So you'll be able to get a perfect entry point with the support and resistance lines in the market. So for you to get this horizontal line, you have to tap on your screen. Then once you tap on your screen, you're going to see this place where we have this circle, square, and triangle in this side. So once you tap on this circle, square, and triangle, then you'll be able to see add object in this place. So when you see this add object now, you have to look out for your horizontal line. Then you tap on horizontal line. Then from there, you'll be able to expect buy when it comes to you finding your support line in the market or support area in the market. And when it comes to the resistance side, you can also go back to that same place where we have a circle, a triangle, and a square. Then tap on it again. Once you tap on it, you get to find another horizontal line. Then tap on another horizontal line and put it towards where there is a resistance point in the market. Just like this place, if I place it on the side down, then it's a resistance point in the market too. And when it comes to support areas, we mostly find them when we're trying to buy in the market. And when it comes to resistance area, we mostly find it where we want to sell in the market too. And don't forget, support can turn resistance and resistance can also turn support in the market. But this is a deeper understanding about the market. And if I tell you a lot of things about it now, you might get confused with this, but just have it in your mind that support areas are those areas where we buy in the market, while resistance areas are those areas whereby we get to sell in the market too. So just like these two places now, we can buy around this side. Using my crosshair now, we can buy around this side. And look at this side too, we can sell around this side. But if the market breaks this place and get a retest around this side, then support have turned resistance in this market now. And if at all the market gets to this place too, just like this side now, and the market comes back to this place, break this place, which is our support area, get a retest and start selling toward the downside, then support areas also turn resistance in the market too. And if the market breaks this place and get a retest around this side also, and start rising toward the upside, then resistance area has also turned to a support area in the market. And from there, the market will keep rising toward the upside continuously. So that's the wisdom behind the support turning to resistance and resistance turning to support in the market. So that is all, man. The more we go deeper, the more I show you more things in the market, so you'll be able to understand faster too. So let's put out our trend line tool in the market right now. Just like the way we used to do it, whenever we're looking for our tools in the market, there's an object that we use in this place. There's a place to point out to in order to find these tools in the market. So you see this place whereby we have a triangle, a circle, and something that looks like a rectangle. So you're going to tap on that place. That's what we call objects in the market. So after tapping on that place, you can see that we have a lot of objects in this place. We have our vertical line, our horizontal line, you can see our arrow, we have a lot of them, guys. And if you want to add more to this, you can just go to this place, tap on it, and you can see the name vertical line, horizontal line. You can see trend line. This is the one we're looking for. We can see other examples, trend by angle. You can see a lot of them in this place also. But this is not our major target for today. So we'll go back and press on what? Trend line. So once we press on this trend line right now, it's going to appear on our chart also. Then from there, we'll use it and do what we want to use it and do in the market. So you tap on the trend line. After tapping on the trend line, you see that there's nothing on your screen. Then you just have to tap on your screen also. After tapping on your screen, just place the trend line to the screen. That is the major work of you tapping on your screen. So by doing this now, you have been able to kind of find the trend line tool in the market. And right now, you can kind of use it and draw what you want to draw on the market. But this is not the right time for me to tell you about how to draw the trend line. So
I would love to wait till when it is time for me to tell you on how to draw this trend line. Then I will show you how to draw it, because I have some basic things that you need to know before I can show you on how to draw these trend lines in the market. So let's wait and then. And also you have to know the function of this trend line, not just by bringing it out to the chart and not knowing what it's going to do for you on the chart. So this trend line is used to identify the movement in the market, just like the way this market is kind of going to the upside. All you just have to do is use your trend line and find a way to get into the market. So that's the work of this trend line, and you can only draw these trend lines on the wick. You can't draw it on the body of the candle. Just like the way some people come around this place and they place on the candle just because it's going to give them an easy result in the market. No, that is not how to kind of draw the trend lines in the market. Just like the way we are in an uptrend and I had to bring out my trend line too, which I applied just now. I just had to kind of draw it in order to make sure that it's flowing with the trend of the market. The major work of the trend line is it helps you identify the movement of the market, it helps you follow up with what's going to happen in the market. And from there, you can kind of get good positions whereby you can make reasonable profits from the market also. That's the work of the trend line. So I'm going to find a good place where I can bring out my trend line too and show you on how to draw it perfectly, because I haven't seen a good example around this place where I can use it. Although this one isn't a bad one, but I still have to look for a place where I can draw it for you and you will get to understand it faster, guys. So let's get down to other part of the market. Let's go back to the history of this market and see if we can get a good position for a trend line. So let's get down. So alright, I think I've found a good place where we can draw our trend line around. So I feel like this place is a good place right now. So let me bring out my trend line tool again. Let's bring out a new one because we won't go back to the former place where we had to draw that one and bring it back to this place. So look at where we're going to bring it again, just like you have known already. You can just tap this in case you just forget the name, and I have to tap on the screen again and bring it out. So this is how to draw the trend line. Whenever you want to draw a trend line in the market, you have to make sure that the trend line is touching the wick of the market, not the body. Some people do mistake and tell you that the trend line should be touching the body of the market. That's very, very wrong, and I won't advise anybody to kind of draw the trend line from there. So if you want to draw the trend line, you have to make sure that the trend line is touching the wick of the candle. Then you place it on that. So look at this place, we're going to find another wick. So look at this place now. We are going to place on this wick in the market. And look at what's going to happen. You can see that this thing is a kind of showing us that this trend line is strong. You can see this other one that came very, very close to it, but couldn't break it also. That's a sign of strength in the trend line. So look at this place where we have drawn the first trend line. The wick hasn't touched finally, but we have to also make sure we drag it till it touches finally. So we're going to drag it and make sure this wick touches it finally. So look at how we're going to do it. You're going to tap on the trend line tool, which is this. The meter is touching perfectly. Then we have to go back to this other part, which is this lower part, and make sure that the lower part also is touching it. So look at this lower part again. Alright. So we got to retest on this trend line. That's a sign of strength in the market, and that's a sign that this market is going to go well for us because the market have tested it 2 times. So whenever you're also drawing a trend, you have to make sure that the market has to kind of touch it 2 times to confirm that where you're going to is very, very right for you. You have to confirm it that the market is going to touch it 2 times in order to show you that this market is going to go well for you. So look at this place where the market have touched it for the first time. That's a very good place in the market. Look at this other place whereby the market has kind of touched it the second time. That's another good place in the market. So look at what the market is going to do finally at this place. This other part where the market came very, very close to it but couldn't break it. As far as the market couldn't break it, it's a sign of strength in the market and it's a sign that we're in a good trend. But do you know that before we took this trend line in the market, we had to kind of identify the trend of the market? That's another basic thing that people don't look out for before taking any trend in the market. Look at this trend. The overall trend of this market is a downtrend. So we taking the trend of the market right now, following the downtrend, is a sign that we are following the overall trend of the market and we are trying to use the tool, which is the trend line tool in the market, to get what the market is trying to preach at this place. So look at what the market did. The market touched the first one, touched the second one, and couldn't touch the third one because the strength of the market was very, very high. The bear strength in the market was very, very high. Look at this place where the market changed in direction.
So that was a very good one. That's a very good example at this place. It's a kind of showing us that the market is strong. And trading from this place to this other part is a whole lot of money in the market. If you don't know how to do it the right way, you're going to lose money. That's why we tell you always follow the trend whenever you're doing anything in the market. So look at the trend line tool again. We're going to find another place where we're going to draw another trend line tool. So look at this place whereby we have another good example in the market. So we're going to bring out our trend line tool in this place also and try to draw it and see what the result is going to be like. So this is our trend line tool, just like the way we have seen before. We are going to drag it again now to make sure that what we are doing in the market is accurate. So look at what's going to happen in this place now. We're going to place it around this place. You can see some level of strength around this place because this is looking like a retest area whereby the market came, retested and couldn't break the position again. So we're going to make sure that it's touching the wick, not the body. Then we're going to drag our trend line from there. So after the market touched the first place, we have to drag it and we're going to make sure that it's going to touch the second place. That's a sign that the market is strong for us. Then we're going to see if any market is going to come close to this trend line in the market. So we're going to draw this to a very long point in the market to make sure that what we're doing is accurate. So look at this place right now whereby the market has gone far and you can see from this place to this other part of the market, you can see that the market couldn't break this trend line also. So look at what happened here. There's an order block around this place, but this is not an order block video. So we're going to still touch it and add another block around this place. Let's not use the trend line tool because that's not the tool that we should be using whenever we want to draw hidden other blocks in the market. So we're going to delete this and put our horizontal zone in the market. So putting our horizontal zone in the market has to give us a confirmation that from this place, which is the hidden block side in the market just came and got a retest around that place. That's why you just need to know other things in the market, not just knowing the trend line, and that's all for you. But the trend line is also good, it's perfect, and it's going to help you a lot in the market also. But look at this place whereby the hidden block just came around this place and the market just came back and got a retest around that place. That retest is also a sign that this market is still going to push to the downside. So people that trade all this hidden other block are going to get their entries around that place and are still going to join the trend and make money from the market. So we that are trading the trend line now, we're going to delete this hidden other block around this place. Our major target is let the market not break into our former areas whereby we got our retest around. So look at this first area around this place and look at this second area around this place. So from there, the market couldn't break it also. The market kept going down, going below, and from there we got a good downtrend, which helped us making some kind of money from the market before they change the market direction. Because normally, the market doesn't move in one direction forever. It's going to change at some point. So look at this place now. It's a good example. Look at this place also. It's another good example. So after this place, you can see that the market just came around and got another retest. So if we have to use our horizontal line, we're still going to find another spot or another entry around that place that led to the market dropping this massively. So let's spot another entry again. Let's spot another place where we can draw our trend line in the market. So let's bring out our tool again. So here's our tool in the market. Let's use it and make another downtrend. So look at this place whereby the market is a kind of showing us another opportunity. We have to make sure that we kind of bring this out and make sure it's lapping on the body of the wick in order to give us that confirmation that we're looking for. So we're going to use this wick around this place. We're going to use that wick in the market. So look at this place also in the market whereby we had a touch around this place. And also we never got any touch around that place till this other point. So we have to kind of spot out this first point and spot out this second point, which is a major point in the market also. But then no candle in this market was able to break this second point. So that's a confirmation that this is still a downtrend in the market. And we have to place this our trend line tool, which is a tool that we use in order to check out if the trend of the market is still active. So while placing this, we have to kind of check to see if other candles in the market can break it, which we never got any candle breaking this path whereby the candles are to retest on the trend line. So this is what kept happening in the market. The market kept going bearish, and from there we got our movement to the downside before a change of market structure. So this is how to draw the trend line. You have to make sure that it's touching the wick and not the body. That's the most important thing you should know whenever you're drawing these trend lines in the market. So the first pattern that we're going to discuss about today is the breakout double top. So the breakout double top, just like the way it sounds like the main double top, is a different double top on the market. And this is how it looks like in the market. This is how the breakout double top looks like. And the double top itself looks different from this one. But the breakout double top seems to be the one that used to occur mostly in the market. So let me explain this in a very good way for you so you can get to understand it and know when to use it in the market also. If you look at this side, you can see the arrow in that place. So I'll be using that arrow to explain this for you in the market. So on this breakout double top, we have our first stop in the market, which is this place. We're going to mark it as our first stop in the market. Let's do that right now. So this place whereby my arrow is right now is the first stop in the market, and I've marked it out with that arrow around that place. So whenever you want to place the first trade, you can't use this place as our entry in this market. If it is the regular double top, you can just use that place as our first stop and it will be the major point in the market. But on this breakout double top, the market will have to come back and break that place. Then we get the major point, which is the point 2 in the market. That's that place whereby you're seeing that 2 in the market. That is our major point when it comes to this breakout double top. Then from there, the market will just go down and break the neckline. After the market has broken the neckline, which is this point whereby we have 3 in the market, which is the place whereby the market will just have to break into again, instead of the market to come and use that place whereby we have our neckline already. This is our neckline in the market. Let's mark it out also in the market. So that point whereby we have our horizontal line is the neckline in the market, and the market will still have to come back and break into that place. That's what makes it a breakout double top. Then from there, the market will keep going down straight. Instead of the market to just come back to the neckline and get a touch around that place, then from there, the market will keep pushing. On this one, it doesn't work like that. So the market will have to come back to this place, break into this point, then get our third entry around this place. Then from this place, you can make your entries in the market. And if you want to place this entry in the market, you have to use this part as your stop loss in the market. So this is our first region in the market. We're going to mark it out as our stop loss area in this market. And this third place becomes our neckline area in the market, whereby the market will just have to break into that neckline area. Then from there, the market can start going to the downside. So that's how the breakout double top works in the market. And also we have an opposite of it, which is the breakout double bottom. So let me bring out that one so we can explain it in the market also. So this is the second part of the breakout double top, which is the breakout double bottom. And just like the way we have the breakout double top, this is an opposite of that one exactly. So what is going to happen in this place is just like the way the first one happened, and the market had to come to this place, which gave us our first zone in the first one. This place is our first zone in this one also. And we have our second zone also in this market, which is this other place. And we have our neckline around this place. So this place is our neckline on this one. And this is the point whereby the market will have to break into the neckline also. Then from there, the market will start going to the upside. So that is how this one works in the market. You expect the market to go to the upside in this one. Let me mark it out so that I can get to understand it faster also. So let's bring out our typing tool in the market. Let's type this out again in the market. So the first one is this place, which is our first top in the market. We're going to mark that one out, and we're going to mark out the second top in the market also. So we're going to write 2 in that place. So this is our second top in the market also. And our neckline, which is the third point in the market. So I'm going to use 3 on that. Then this place is our neckline. So this first one is that place whereby we expect to get our first entry around this place, which is the first top in the market. And this second top is the place whereby we get the breakout in the market, while the third place is the place whereby we get the neckline in the market. And on this one, if you look at what the market is doing exactly, you will know that the market will just get to a neckline. Then on this neckline place, the market will just have to break into it. Then after the market breaks into it, we get the move to the upside. So when it comes to the breakout double bottom, we expect buys in the market. And when it comes to the breakout double top, we expect sales in the market. Let's mark this out also in the market. I think I forgot to say it in the first one, but if you're someone that watched to this point, you have gotten the information already. So let's write it. And also don't forget that on the breakout double top, we expect the market to sell after the break on the neckline. So that's what we expect on this. And on the breakout double bottom, we expect the market to buy also. So let me show you how that one works in the market also. So on this breakout double bottom right now, we expect the market to buy after the break in the third place, which is our neckline in the market. So after this place, we expect buys in the market, and from there the market will just keep pushing to the upside. And also, let me show you how these things looks like on the chart. so you don't get confused whenever I see these opportunities in the market and get to use it at the right time. So this is how the breakout double top looks like in the market. So whenever I see this kind of chart patterns in the market, I'm sure you know what to do already. So this is that place whereby I used to explain the market as our first stop in the market. And we have our second top, which is that place whereby the market have to break that first top and tell us that this is a breakout double top. Then from there we have our neckline, and the market has to break into the neckline also, just like the way I explained before. Then from there the market keeps dropping to the downside, just like the way you can see it on the chart. So this is how the breakout double top looks like in the market, and if you turn it upside down, you get the breakout double bottom. So that's how it works in the market. Let's get to another example of these chart patterns in the market. So the second best chart pattern that we're going to discuss in today's video is the double top. Just like the way I said that the double top is different from the breakout double top and double bottom also in the market, I would love to explain it so that you can get to understand it also in the market and know what we are doing in this market. So we have our first top, we have our second top, and we have our third top in the market, just like the way we used to have it in that breakout double top in the market. So let me use my arrow and explain this for you so you can get to understand it. Look at this place whereby the arrow is right now. Look at this point, which is our first top in the market. That one is the major top in the market. While on that breakout double top in the market, the second top is the major top in the market. So in this place, the first top is the major top in this market. So what happens on this one is that once the first top is formed in the market, the second top will not be able to break the first top. But if you go back to that first one, you know that once the first top is formed in the market, the second top will have to break the first top in the market. But this one, it is different on its own. So in this place, the second top is not expected to break the first top in the market. And on this place is the neckline. And in the neckline point of this one also, the market is not expected to break into the neckline. So the market must just end around the neckline, just have a retest around that place. Then from there, the retest will just keep going to the downside. That's how the double top itself works in the market. And if you check it very well, you can see that this one is totally different from that first one, which is the breakout double top in the market. And in this one, which is the double top, we expect the market to sell. And on the double bottom, we expect the market to buy. So this is what we're expecting in the market. Let the market get back to this neckline, then get a retest around this place. Then after we get a retest around this neckline, we'll sell from that point. And you can use this place, which is our second entry in the market, as your stop loss area in this market. So in order to know that this is a valid double top in the market, we expect the market not to break this second point. And if the market just get a proper retest around this place, that's it, perfect. Then we'll get our entry into the market and we take our sales from there to wherever the market is going to end. For instance, we expect the market to get back to this place, then we're going to put our TP around this place, and trust me, the market is going to break it. That's how this one works in the market. So that's how the double top works in the market. And when it comes to the double bottom, it's just like an opposite of the double top in the market. So let's get to explain this also. So here we are on the double bottom right now, and this is just an opposite of what happens on the double top. So when it comes to this double bottom also, we don't expect the market to break into it at all. We expect the market to just get back to that place, then get a retest around that place. Then from there, the market will keep going to the upside, because on the double bottom, we buy in the market. So we're going to bring that out right now. I'm going to write it out again so we can know what we're doing in the market. So on the double bottom, we buy in the market. And when it comes to the double top, we sell in the market also. So this is how it looks like, so that whenever you see the opportunity in the market, you can just mark it out in the market also. But I would love to show you on how it looks like on the chart, so that whenever you see these opportunities, you don't have to miss them at all in the market. So let me bring out my chart form of this. Let me show you how it looks like on the chart exactly too. So this is how it looks like on the chart, and this is the first place where we used to draw as our first point in the market, which is our first top in the market, and this is our second top in the market. And just like the way I explained it before, the market is expected to break this first top in the market. So the market will just have to come back and come very close to it, which is the second top. And from there, we have our neckline, which is this place in the market. And the market will just have to come and get a retest around this. So this place now, you can see this candle around this place. This is an hidden order block candle in this place. And the market just came very, very close to that place and had to keep dropping again. So looking at this place already, you can see that the market has confirmed it with this hidden order block candle around this place. Then from there, the market just engulfed again. And that's a sign that this is going to be a very good double top in the market. And from there, the market kept behaving as if it's trying to consolidate a little bit and kept going towards the downside in the market also. And when it comes to the double bottom part of it, you expect the market to just do an opposite of what I just explained in this place. So that's how the double bottom works. and this is the double top part of it. Don't forget the market is expected to sell when we have double tops in the market, and the market is expected to buy when we have double bottoms in the market. So keep that in your mind and don't forget that also in the market. And this is how it looks like exactly on the chart. So whenever you see these opportunities in the market, make sure you use it very well and make sure you understand it so that you can get to operate it in a nice way and make crazy figures from the market also. So let's get to the third chart pattern in the market, which I'm going to explain also so you can get to understand it in a faster way. So this is our third best chart pattern in the market, and I'll be using this arrow to explain it for you in such a way that you get to understand it faster in the market. So look at our first stop in this place, which is this place I've marked out already as our first stop in the market. And when it comes to triple tops in the market, we expect the second top to break the first top away and become the major point in the market whereby the market doesn't have to break again. Then from there we have our third top, which is this place that gets almost equal with the first top in the market, but the second top will never be broken. That's what makes it a triple top in the market. And from there we have our neckline around this place, which is this place that I use as my breakdown in the market. That's my neckline in the market. Then we get a retest around that place. It's not a must that on the triple top the market will have to just come and get a retest around it. Then from there the market will start going to the downside. But on this triple top, it is very, very compulsory that the third top shouldn't be broken. That's what makes it a triple top in the market. And if you look at this place, you can see this candle around this place. This is a continuational candle around this place, telling us that the market is not going to break that place in this market. So this market right now just came back and got a retest around this place. Then from there, we have our lower high, and from there the market kept dropping to the downside also. So this is how the triple top works in the market. So look at this, you can see everything that's happened in this market. This is an uptrend that just changed to a downtrend in the market because of what? The triple top in this market. So that's how the triple top pattern works in the market. So let me show you how the triple bottom works in the market so you can get to understand these things in a different way also. So looking at this place, we have our first bottom in the market already, and this is our second bottom in the market. So what happens in the market is that once we have the first bottom, the market will just rise up a little bit, but not to break this other point in the market. That's what makes it a first bottom in the market. Then from there, the market will just have to go down again and break that first bottom. That's the sign that the market is about to change its direction and move to the upside. Because whenever we're trading triple bottom patterns in the market, we expect the market to go to the upside. So from there, the market just have to get this place and break this first bottom in the market. So that was how we got our second bottom in this market. Then the second bottom, we also have to come back and break the first bottom in this place. So this place whereby the first bottom reversed from the second bottom, we have to break it. That's why the market broke it in this place. But still yet, the market is not expected to break this major point in the market, which is this bearish market around this place that's about to turn to a bullish market right now. So look at what's going to happen again. The market just has to come back again and get very close to this our second bottom in the market, and the market is not expected to break the second bottom in the market. So that's how we got our third bottom in this place. Then at this place, which is our third bottom in the market, we expect the market to rise to the upside. And from the upside, we get our neckline in the market. So this neckline point is our area whereby we expect that from there we can enter the market and see reasonable results from the market. So sometimes the market gets to reverse and get a test around this neckline. But if you see candles like this, you know that this is another block candle around this place, and you expect the market to keep pushing to the upside. So this is a strong bullish candle around this place, and we don't expect the market to get back to this place, but also take our entries around this place because this candle is a good candle in the market and it's a very strong bullish candle in the market also. And if you look at this place, you can see this engulfing candle around this place. So that's a sign that this is going to move to the upside also. So whenever you see these opportunities in the market, make sure you get to know them and know what the candle is saying in the market. Then from there, you can know if you're expected to wait for the market to reverse or if you're expected to enter at that point, then follow up with the trend of the market. And don't forget, whenever we're trading triple bottoms in the market, we expect the market to buy. And whenever we're trading triple tops in the market, we expect the market to sell also in the market. So that's how it is in the market. So let's get into the fourth best chart pattern in the market so I can explain that also for you to get to understand it and know what to do at the right time also in the market. So this is our fourth chart pattern that I'm going to explain in this video, and I'm going to use this arrow to explain it in such a way that you get to understand it faster also, just like the way we have been doing it. So let's use the arrow right now and start it. So the name of this chart pattern is called the head and shoulder pattern, and this pattern is also very, very good when it comes to the market. I will make a lot of profit from trading this pattern also in the market. So that's the reason why I had to bring it out so I can explain it for you so you can get to understand it also and follow up with it whenever I see it in the market and make more money from the market also.
So look at this place whereby we have our shoulder in this place. Then from there we have our head. So this is how this one looks like. It looks like a W sign, something like that. Then the market will also come back and get a shoulder around this place. So the two shoulder must be equal, and sometimes one might be bigger than the other one. But if the head is bigger than the first shoulder, that is a sign that the market is having an head and shoulder pattern in the market. So this place is the first shoulder, this place is the second shoulder, and this is our head in the market. And what it happens when it comes to head and shoulder patterns in the market, once the market gets to this point, which is the place where we used to draw our neckline in the market, which is the first shoulder in the market, then the market will just go back to the upside again, and the market has to break this first shoulder. Then once the head breaks into it, we have our neckline, which is this point, which is our first shoulder. Then the second shoulder will come out in the market. Then we have a retest around this place. So in this one, it is compulsory that we should have a retest in this market in order for us to know that what we are doing in the market is actually accurate. So once the market gets back to this place, then from there the market will start falling to the downside again. That's where they call the break of the neckline. And if you look at this place where we have the break of neckline, that is where the head we have to come and break the first shoulder. Then from there we can get the second shoulder in the market. Then from there we can also get this retest, which is very important for us to take this trade. So the retest is the confirmation for this head and shoulder pattern in the market, and once we just get it, we start moving to the downside also in the market. So that's one good thing you need to know about this head and shoulder pattern in the market. Let me show you how it looks like on the normal chart. So this is how the head and shoulder pattern looks like in the market. And looking at our arrow, you can see the first shoulder in this place, and you can see the second shoulder in this place, and you can see the head. And just like the way I've explained it using that diagram, you can see that if the market gets to the upside, the market has an head in that place, and the market has to use the head and break the first shoulder. So once the first shoulder gets broken in this place, we get our second shoulder. The second shoulder might not be equal with the first shoulder, but what happens in the market is that we should get a retest around that place. Then from there we can get the retest to the downside. So looking at this place, you can see the retest we got around that place, and you can see this candle formation around this place. This is a strong sign that the bulls are losing strength in the market and the bears are taking over in the market. So that's one thing you need to know about these head and shoulder patterns in the market. And you can see the break of neckline. That's the place where we expect the head to break it. Then from there we can get the second shoulder, just like the way I explained in the first video, guys. So that's how it is in the market. This is how the head and shoulder looks like in the market. Whenever I see opportunities like this in the market, make sure you take it and make reasonable money from the market also, because every knowledge you have as a trader is an opportunity for you to make more money in the market. Keep this in mind and don't play with these opportunities you see in the market in order for you to make more money from the market also. So that's it about this head and shoulder pattern. And on this head and shoulder patterns in the market, we expect the market to do what? To sell from this part to the downside. So this is our inverse head and shoulder in the market, and we are going to use this arrow to mark it out so that I can know the things we're going to do on this also and get to do them in the right place and make money from it also. So look at our arrow in this place. We're going to use it to mark the things we're going to do in this one also. So if you look at the structure around this place, you can see our first shoulder around this place, and the market has to break it in order to form the new head. Then from there the market will just have to break the neckline also, or get very close to it. Then we get the second shoulder, which is our right shoulder in this place. Then from there the market has to break the neckline, then probably get a retest on that place due to the candle formation that is formed around that place. Then from there we can start buying on this one, because if you check on this one, you know that we are expected to take buys in the market, and on the head and shoulder pattern in the market we have to sell in the market. So look at how it looks like also on the chart. This is how the inverse head and shoulder looks like in the market. Look at the first shoulder in this place, which is the left shoulder. Now look at our head in this place, and if you look closely on this one, you see that we have our second shoulder, which is our right shoulder, very close to the head. Why? Because there's a kind of rejection around this place, and market is expected to take this first place away, which is the first place that should have gone up a little bit. Then from there we get our second shoulder, but the market couldn't go up in that place, so we had another move to the upside and we got the second shoulder around this place. So looking at this place, you can see some kind of rejection around this place also. So the rejection around this place is a sign that we can take our trades or our entries around this place, or we can wait for this place, which is our neckline, and which is also the proper place where we should take our entry on the head and shoulder patterns in the market. So on this inverse head and shoulder, we can take entry on this place, and we can also take entry on this place due to the candle formation that we see in the market, so we can get to do the right things and make more money from it, guys. So don't forget, on this one you buy, and on the other one, which is the head and shoulder, you sell in the market. So this is the inverse head and shoulder in the market. Let's get to other chart patterns so I can get to explain them more for you again, so you can get to choose the one that works for you and focus on it while you trade the market also. So let's go. So the fifth one which I'm going to explain in today's video is the falling wedge in the market and also the rising wedge in the market. So these two are also very important when it comes to short pattern trading in the market. So we're going to use this arrow just like the way we used to do, and we are going to use it to explain everything right now on this chart. So on the falling wedge in the market, we expect the market to drop a little bit, then we bring out our trend line tool, which is the tool we use on this one. So the trend line tool is what is going to confirm if you're going to get that falling wedge in the market, because when it comes to this falling wedge in the market has a target or a place whereby the market is expected to get back to. Then from there the market will start following with the trend. Then from there we can get our entry around that place in this market. So what happens on this falling wedge is that the market will start behaving as if it's going to go to the downside. Then all of a sudden the market will just change its movement. And this works with the trend line tool and support tools in the market. So when it comes to the falling wedge in the market, we get our first touch around this place. Then from there we bring out our trend line tool, so that once the market gets to the second touch, which is our second test around that place, then from there we can expect that the market shouldn't break the second point again. Then from there we expect the market to get lower again, getting close to that place whereby we have our support zone in the market. Then from there the market can just push to the upside again. So this is another trend line around this place that's identifying that the market should get back to a support zone in the market. Then from there we can get our entry, and the market at this point has to come out and break this place, which is our third point in the market. Then from there sometimes we get a retest on the trend line in the market. Then from there we keep pushing to the upside. So looking at this one, this is just a diagram of it, and when I get to the chart I will get to explain it more for you, so you can get to know these things faster in the market also. And looking at this other side, we have our rising wedge in the market, and this is what to expect on this one. Just like this one is for buying market, this one is for selling market in the market. So let me mark it out for you guys. Then on this other side, whereby we have the rising edge in the market, we expect the market to sell. So the market will start behaving as if it's going to the upside. Then all of a sudden, if the market just get to the support zone that is around that place, then the market will just follow up with the trend, and from the trend the market will have to come and break the trend line in the market. Then due to the candle that we have in the market at that point, if it is a continuation candle in the market will keep dropping to the downside. And if it is a reversal candle in the market, then we expect the market to get a retest around this place. And from there we'll keep having our sales in the market also. So that's how the rising edge works in the market. Because on the falling one right now, we expect the market to fall, and from there the market will just get a bullish move again. Then from there the market keep going to the upside, and on the rising one we expect the market to start behaving as if it's going to go to the upside. Then all of a sudden the market will just change its market direction, and the market will start going to the downside also. So that's one thing about them, and you need to keep it in mind. So let's get back to the chart so that I can use the chart and explain this for you in a better way, so you can get to understand these things faster also in the market. So this is how the falling wedge looks like in the market, and you can see the trend line on this one. You can see the second trend line whereby the market is not expected to break any point at all. Then from there the market will just have to get back to the support zone whereby the market is expected to move from that side to the upside. If I expand my screen a little bit, you can see that we have a support zone around that place, but I just want to explain everything in a simple way for you all to get to understand it faster. So looking at that place right now, we have our retest point, which is this third part whereby I used to mark out in the chart, which is the third part. Then from there the market got a retest around this place and started pushing to the upside. And when it comes to all this falling wedge and rising wedge in the market, once the market start pushing, it's going to remove all those parts whereby the market consolidated in that trend line. Then from there we can get a nice reward on the trade that we took in the market. If you can look at our risk to reward ratio in this place, you can see that the risk is very low and the reward is big. And from there the market just have to come back and take this point away, which is our first point in the market whereby we got our falling wedge from. So that's another thing about this falling wedge that you need to know. And when it comes to the rising wedge, you know what to expect in the market in this place is for the market to sell. And you can see this place whereby the market got the first touch around this place, then the second touch came back to this place, and the third touch came around this place. Then the market has to get back to that place whereby we expect the market to get our support zone around. Then from there the market got a retest. So looking at this place, you can see some candle whereby the market is telling us this candle is a retest candle in the market, and this is a rejection candle in the market also. And from there the market will keep going to the downside. So that's one thing about this rising wedge in the market that you need to know also. So looking at this place whereby we got a retest around this place, the market started dropping to the downside. And if you look at this place very well, you can see that the market has taken this first point away, which is the first wedge in this market, and that is a good risk to reward ratio in the market, and day traders can use this to make a lot of money from the market every day. All you just have to do is know how to spot it, then from there you can get to make more money on the chart. So that's one thing about this rising and falling edge in the market. Let's get to another chart pattern in the market. Let me get to explain that one also for you. So this is the 6th chart pattern that we're going to explain in today's video, and I want you to pay very good attention to this one so that once I explain it, you can get to understand these things faster in the market. So the name of this one is bullish rectangle pattern in the market, and this is how this one works in the market. It works like a support and resistance zones in the market, and on this one you can see what the market is doing right there. This is our first support zone and this is our resistance zone in this market. So when we have a bullish rectangular pattern that is following up with a trend and the market is going to the upside, what we're going to do is that we are going to expect the market to get to this point, which is our resistance zone, and this place is going to be our support zone in the market. I think I should mark that so you can get to understand it faster also. So that is our support zone in that place and that is our resistance zone in this market. So I've marked it out so that you get to understand this faster. So in this place, we expect the market not to break the support zone and we expect the market to break this resistance zone because this is a bullish rectangular pattern. And if we are in a bearish rectangular pattern, we expect the market to break the support zone in this market. So look at what is going to happen. This place, which is our support zone, is our major entry in this market, and we expect the market to break this resistance zone. So we got the first move around this place, and we got the second move to confirm that this is going to be a resistance point in the market, and the market was not able to even break it again. That's a strong sign that this is a good resistance zone in this market. So when we got the second test and we came back again to the support zone, the market did not break the support zone also in this market. We expected another resistance point in this market, which the market got again and tested it again. The market will just come back to this place, which is our third point in the market. Then from there, the market will just come back and break this place. So it's either the market breaks a little bit and got a retest based on the candle that was formed around that place, or the market will just keep pushing to the upside. So at this point, we're expected to get our entry, which is after the first one, the second one, and the third one, which is a confirmation that this is going to stand strong in the market. And if you look at this support zone also, you can see that the market did not break it at all. So that's a strong confirmation that what is going to happen in the market is very, very good. So that's a strong confirmation that this is a bullish rectangular pattern in the market. And from this place, we expect the market to keep pushing to the upside. That's why we have our entry around that place and we have our stop loss around this place. And you know what to do already. Once the first one did not break, the second one did not break, and the third one did not break it, we will bring out our stop loss and drop it below it a little bit. Then from there, we can determine if the market is going to go to the upside or if you're going to lose little amount of money on this one. So that's one thing you need to know about this bullish rectangular pattern in the market. So let me just get to explain the bearish rectangular pattern in the market. Then I can get to show you on how it looks like on the chart also, so you can get to know it when you see it on the chart also. So this is a bearish rectangular pattern in the market, and from the name alone, you know that this is going to be a selling market. So that word bearish means selling in the market, in case you don't know it. So we have our first place in the market, which is this resistance level in the market, because on this one, the resistance level or zones in the market are stronger than the support levels in the market. So the market came to the first place and couldn't break it. The market had to come to the support level again and tell us that this might be a bearish rectangular pattern in the market. Then the market still came back to the second place again. It couldn't break it. Then we got this third place, which is our third movement in the market. And from this place, we are expected to get our entry if we want to go aggressively on this market. But the major place whereby we're expected to get our entry is on the support level in this market. So look at what's going to happen right now. So what's going to happen if you get to meet this opportunity in the market is that this place whereby you got the third level around, you're going to place your stop loss above it. And looking at this place, you can see that the market got a retest around that place. You can see the candle that was formed around this place and the market came back and retested it. So this retest alone is a strong sign that this is going to be a very good bearish rectangular pattern. And from there, we keep getting the market to sell to the downside again. So listening from the name, you know that on the bullish one, you're expected to buy, and on the bearish one, you're expected to do what? Sell in the market. So that's all you need to know about these rectangular patterns in the market. And I want you to pay attention to the levels in the market, which is this place where we have our resistance level. This is the first one, and this is the second one, and this is the third one. So always take note of this so that whenever you see opportunities in the market, you get to know what the market is actually telling you in that chart pattern, and get to know if you have to enter on that chart pattern or if you have to leave it and get to find another one that you understand very well before you can get into the market. So let's get on that chart pattern in the market so you can get to know the one you have to choose when you spot opportunities in the market. So let's get to the seventh one. So the seventh chart pattern that we're going to talk about today is the ascending and descending triangles in the market. And I'll be using this arrow to explain it just like we've been doing since. So on this ascending and descending triangle, we make use of our support lines and our trend lines in the market. If you look at this place, you can see that support line around that place, and you can see that trend line around this place. If you look at this place also, you can also see a support line around this place,
And you can also see a trend line around this place. So this side is for what? The descending side, and this side is for ascending side. So just know the difference also, so you don't get to confuse yourself on this. So when we want to spot this one, so we spot it in continuation patterns in the market. Look at what is happening in the market. We have to draw our trend line around this place. Starts from this part, then we drag it to the upside. Then we got the first rejection around this place. So we have to bring out our support line around that place. Then we have to keep it there till we get the second one. Then the third one that we have to break out of this place again. Then the market will keep going to the upside. And looking at this ascending triangle in the market, you can see that the market has to be in a triangular form, just like the name sounds in the market. Then from there, the market got the first move around this place and got the second rejection around this place. Then the third one, which from there, the market has to keep pushing to the upside. So this is a continuation pattern. When we have ascending triangles in the market, we expect the market to keep pushing to the upside. And looking at this other part, which is the descending triangle in the market, you can see that the market came around this place, got a retest on that triangle that is trying to form around this place, which is this trend line in this place. So the trend line and the support level has to join together in order to give us an ascending or descending triangle in the market. So looking at this descending side, you can see that this trend line, the market came, got the first retest around that place, got the second retest around this place, and got the third retest around this place. Then from there we have our rectangular line, which is the support zone in this market. Then we expect the market to break it. Then from there the market can keep going to the downside. And if you can look very well, you can see that on the descending triangle, we have our trend line on the upside, and on the ascending triangle, we have our trend line on the downside. So on this place, we're expecting the market to keep buying, and on this place, we're expecting the market to keep selling, just like the way the word sound descending and ascending in the market. So let's get to the 8 chart pattern in the market so I can get to explain it for you so you can see them also in the market and get to make money from it also. So let's get to that point also. So the 8 chart pattern that we're going to talk about today is the cup and handle patterns in the market. So when we talk about these cup and handle patterns in the market, some people just think that the market will just come and form a U shape or get a cup handle, then from there the market will just keep going to the upside. But no, it doesn't work that way. This is how it looks like in the market. Then on the market, you just get some structure that looks like it. Not that it's going to get a U shape in the market, but it's going to give it a sign that this is going to go back to this point, which is our first zone in this market. Then from there, the market will just get a retest again, which the retest is not expected to break it. Then from there, the market will get to this point, get the first retest again, then have to go down a little bit and get a retest at this support zone in the market. Then from there, the market can get the handle and the market will keep pushing to the upside. So once the market just break this upside, which is our resistance point in this place, then you can get your entries around this place, whereby the market has broken it already, because sometimes we still get a retest around that place due to the candle that was formed around that place. The major thing is let this first place get retested again and let the market not break that place. Then from there we can just get the undo and keep going to the upside. So when you see the market trying to form a U shape in the market, just know that it's the cup and handle pattern that is trying to form. Then all you just have to do is get the handle. Once you get the handle, then that's the confirmation that this is going to be a cup and handle pattern truly in the market. Then from there, we expect the market to break and still go to the upside again if you're in the buying market. And if the market is in the selling market, you expect the market to go to the downside also. So you have to make sure you know these things also and get to use them at the right time and know what to do in the market. So that's it about this part. Let's get to the 9th chart pattern, which I'm also going to explain for you so you can get to understand it and make more money from the market also. So this is the 9th chart pattern that I'm going to explain for you guys today so you can get to understand it also and make reasonable money from the market also. So look at this one. It's called the M pattern, and on the M pattern we expect the market to drop to the downside, and we have another one which I'm going to explain in this video also, but I'd love to explain this one first before I can get to the second one. So on this M pattern right now, what happens is that the market just rise to a resistance point in the market. Then from there, the market will just drop a little bit to the downside. Then from there, the market will just get another retest again. So if the market get the second retest, that's where the market will have to drop from there and go to the downside. Sometimes the market do get equal resistance point on the M pattern, and sometimes the market doesn't get equal resistance point but just come very, very close to the first resistance point. Then from there the market will start dropping immediately. There's nothing like the market getting to the neckline to get a retest before anything can happen on this one. So that's how the M pattern works in the market. You can get your entry at the second resistance point, or you can get your entry at the neckline, but there's nothing like the market coming back to come and retest there, or the market breaking the neckline or anything like that on these M patterns in the market. So that's how this one works in the market, and it's very, very simple to spot in the market, and it normally occurs in the market. The only thing for you to do is make sure you follow up with the trend of the market, then get to know where you can get these M patterns in the market, except you got the other pattern which I'm going to explain right now in this video. so you can do the difference between the M patterns and the other patterns that I'm going to explain in this video right now. So the 10th pattern is the W pattern, and this W pattern is a different pattern on its own. Just like the way we have the M pattern, which is for us to spot out places whereby we can get our selling points in the market and the market will keep going to the downside. On the W pattern, it is a different case on its own. So looking at this place whereby we expect the market to drop to the support zone, then from the support zone we get a little bit move to the upside, then the market will just come back very, very close to it and form a W pattern in the market. Then from there the market will just push to the upside, and from there the market will keep going to the upside, guys. So that's one thing about this W pattern. It's just like an opposite of the M pattern. And what happens also is that in this place you don't get anything like a retest to the neckline or a break into the neckline. So the market just keep going to the upside after this one happens in the market also. So that's all you need to know about the chart patterns in the market. And don't forget, the W pattern is for what? Buying market, while the M pattern is for selling markets. Keep this in mind and get to make use of it whenever you want to trade in the market. So right now, this is how the market structure looks like. And when it comes to market structure, we have SL, we have SH, we have BOS, and we have rally, we have drop. And from there, we have retest again, and every other thing that needs to be on the chart, just like the way you can see them on this screen. So in this place now, you can see this SH, which means swing high in the market, and this SL, which means swing low in the market. And we also have our BOS, which is our break of structure in the market. But when it comes to market structure, the market will have to come break former structure, get a retest around that former structure again, then continue going towards the downside. Then when the market direction is about to change, the market will now change its movement and keep going to another direction also. But looking at this one, you can see that we have this arrow around this place, which I would love to use to explain this for you, so you can get to understand it faster. So using this arrow now, let me just make it a little bit bigger, so you can get to see it faster. So look at this arrow right now. So looking at this side now, you can see that the market is dropping from the upside towards the downside, and around this place you can see that there's a change of market direction. But before we have that change of market direction, around this place we have our first swing high in the market, and the market has to come and break this former structure, which is our swing low in the market. Then from there we get our break of structure. After getting our break of structure, what do we expect again? We expect the market to come and get a retest around the former structure. Then from there the market now drop to the downside again. And while the market is trying to drop to the downside, we have our new break of structure around this place. And this place over, we have the former structure around this place, which is this one that we got from this, our swing high in the market, becomes our new swing low in the market. And this retest around this place becomes our what? Our new swing high in the market also. So around this side where we have our swing low in the market will need to come around that place and break this former structure, because this is a structure in the market already. And once the market breaks it, we have our what? Break of structure around that place. So around that side now, we have our new swing low in the market, and we expect for the market to still come and break that place. Then the market will now come towards the downside. So after the market broke this place, we have our new what? Break of structure around that place also. So looking at this place now, you can see that the market is about to change its direction. And around this side, we have our base in the market. Due to the fact that the market wasn't able to come break this former structure, then from there we get a new structure in the market, telling us that this is a place whereby the market wants to change its direction. Then from there we got our drop in the market, and this side which the market behaved as if it's going to go towards the upside is the place whereby we have our rally in the market, and this place whereby the market drop is our drop in the market. So from there now we expect what? We expect the market to come and break this former rally, which is the place whereby we have as a new break of structure. Then from there the market will now come and get a new swing high in the market. So looking at this side now, you can see that the market came, break this place whereby we have our rally in the market, came and got a retest around that side, telling you that this is a confirmation that the market is about to push from there towards the upside, and that this market that is selling from the downside is about to change to a bullish one. So we'll be expecting buys from this side since the market is about to change its direction. So around this place whereby the market came and got a retest around the rally, we got our retest point in the market, which is this retest you're seeing in this place, and we got a new swing low in the market, and we got a new swing high in the market. So for the market to continue pushing, the market outwards, break this former place whereby we have our swing high in this place now, and we got a break of structure around that place. We got a new swing high around this place, and we got the retest to this point, which is our break of structure area in the market. We got a retest around that place, and we expect the market to still break this our swing high in this place and give us a new break of structure in this side also. So after the market broke this swing high in the market, we expect a new what? A new swing low in the market, and we have a new swing high in the market, and we have a new break of structure. So if at all we want to continue drawing the structures, we still get another swing low in this place, then another swing high continuously until the market gets to a place whereby it will have to form a base and a rally and a drop. Then from there the market direction will now change, and the market will now change its movement from either a selling market to a buying market, just like this place whereby the market changes movement from a selling market to a buying market. So that's how the market structure works in the market, and I would love to also explain it in the chart for you so you can get to understand it faster. So let's get to the chart. Let me get to explain it for you in a faster way so you can get to understand it also. And don't forget that this SH means swinger in the market, SL means swing low in the market, and we also have our word breakout structure, which is BOS in the market. So don't forget the meaning of these abbreviations in the market also. Alright, so here's a live example of the market structure in the market, and I would love to explain it for you in such a way that you get to understand it faster. Just let you have marked out everything for you, and I'll be using this arrow to explain it for you so you can get to understand it also in the market. So on this side, we have our swing high in the market, we have our swing low in the market, we have our swing high again. But let me get to explain it for you so you can understand how I got this swing high and swing lows in the market. So look at this place now. This is a new swing high in the market due to the fact that the market is coming from the downside. That is, we are in the downtrend, which is a bearish market also. So around this place, we have our first swing high in the market. We got our swing low around this place whereby the market came, break this former structure around this side, then give us this new swing low in the market. And around this side, we expect the market to do what? Rise towards the upside again. So the market came very, very close to this side, got a new swing high in the market, and the market broke this former structure around this place and give us a new break of structure in the market. That's how we got our BOS around that place. And after then, the market fell from this place where we have our swing high in the market and dropped towards this downside before it got under the test towards the upside. So this place where the market came around becomes our new swing low in the market, and around this side whereby the market rise to again because our new swing high in the market. And around this place whereby the market broke after forming this swing high in the market is called our break of structure in the market. And from there the market continued going toward the downside, and from there we got our base around this place. But before we got this base in the market, look at what happened in the market. There's a structure around this side. Instead of the market to get a proper retest around it, just like the way others have been having retest around and not breaking the former structure, then from there the market now start dropping towards the downside again. Instead of the market to get that proper retest around this place, the market came, broke that place. So after the market broke that place, which is this former structure in this side, around this place now we'll be expecting that there's a new change in market direction due to the fact that the market is not following the former method or the former format that the market was using in order to drop toward the downside. So around this place whereby the market came and got a new swing high in the market, we expected that the market will change its direction because it did not follow the former format, and from there the market got a new structure around this side, telling us that the market is going to change its direction. So around this place whereby the market now dropped towards the downside, we expected that place to be our base because the market has given us sign that there's a new direction that is coming up, and this place is an evidence that there's a new market move that is coming up. So when the market came and got a base around this place, we expected that the market will just come and rally around this place, then get a drop towards this side where we have our base. So as far as the drop isn't strong enough to break the base in the market, we expect that the market to change its direction. So looking at this place now, you can see that this drop wasn't able to break the base area in the market, and the market just came around that place, got a retest. Then from there, the market started going towards the upside. And due to the way we used to trade in the market, this place whereby the market fell from towards the drop side becomes our new retest area in the market. And we expect the market to come and get a retest around there. Then from there, the market start pushing towards the upside continuously. Then we understand that there's a new market structure in the market. So around this place now, we got some candle that showed us a retest around this place, which is this pin bar candle in this place. It wasn't strong enough to keep the movement going, but it just came and gave us a sign that there's a market that will come back around that place and give us a retest. Then from there, the market will then start going towards the upside. So looking at this place now, this is an area in the market whereby we got a lot of rejections. And these rejections around this place is a sign that the market is going to push towards the upside. So instead of the market to break this place now and come and get a retest around this place, the market came and gave us this pin bar around this place, telling us that this place is tested already, and we expect the market to just come and get a retest around that pin bar around that side. Then from there, the market will start pushing towards the upside again. So looking at this place now, look at what happened. Around this place whereby the market came and formed a pin bar in the market came, gave us a new swing high in the market, and from there the market came and got that retest. And around this place whereby the market got the retest is called our swing low in the market. And around this place whereby we expect the market to break this new swing high in the market is the place whereby we're going to have our break of structure. And when the market broke here, we got a new swing high in the market also, and we got a new swing low in the market. So expect the market to still come back and get a retest around that place. Then from there the market start pushing towards the upside. So that's how this works in the market, and it's very, very easy to understand. The main thing is that whenever the market forms a swing high in the market, expect that there will be a new swing low in the market, and when the market breaks that swing high in the market, expect that there will be a break of structure in the market. And whenever the market starts changing its structure, just expect that there will be a new a new base, then a new drop, then from there the market plan changes direction towards the upside, especially when the market is in a support area in the market, because this market is in a support area. That's why we were able to get this our base drop and retest in the market. There's an area in the higher frame that is helping us to push this market toward the upside. That's how this works in the market, and it's very easy to understand. If you don't get to understand it the first time, get to watch the video over and over again. Then from there you can get to understand how these things works and get to know what you should do whenever you see them in the market also. So this is the diagram of our liquidity sweep in the market, and after this I would love to take you to the chart also, so I can show you some live examples of this liquidity sweep in the market, so you can get to understand it more and more from there. So just like the way we have always said before, that's to break the former structures in the market and form a new structure, then from that place the market to keep pushing. So looking at this place, we add some structures in the market, which is this structure in this place. This one I got a test around this place. Then from there the market behaved as if it was going to the upside. Then all of a sudden the market came back and broke these former structures in the market. That was how we got our liquidity sweep in the market. And if you look at this side, you can see the bearish part of it, whereby the market is in a downtrend. Then all of a sudden the market came back and cleared these two structures in this place, which is this first one and this second one. Then after the market cleared it, the market continued going towards the downside also. So that's how the liquidity sweep structure looks like in a market. The market must always come, break the former structures, then from there, the market start pushing towards the upside. That is on the bullish one. Then on the bearish one, the market just come back, break the last resistance structure in the market, then from there, the market will get a new structure, and from there, the market will start going towards the downside already. And I would also love to take you to the chart so that I can get to explain it for you, so you can get to understand it faster, guys. So let's get to the chart, let's do some other kind of tests on these guys. So this is how the liquidity sweep looks like in the market. And just like the way we said before, when it comes to the liquidity sweep in the market has to kind of break the former structure. Then from there, the market will create new structures. So looking at this place at this point, you can see that there was a structure around this place. And if the market was to kind of continue going down, that is a kind of dropping to the downside, that is selling the market was expected to come and get a retest around this place, which is this second place that I'm pointing out with my arrow right now. So we expect the market to get back to that place. Then from there, the market will keep dropping to the downside. But due to the fact that we have a very good resistance point in this place, which is this other side in the market, we had the market breaking this other side. Then we got a retest very, very close to this one, which is our main resistance point in the market. Then from there, the market started dropping to the downside already. So looking at this place now, the market came, sweep this place away, which is where we got our liquidity sweep around. The market came and broke these two structures around this place, then gave us this structure in this place, which is our new liquidity sweep in this market. Then from there, the market started falling to the downside. So looking at this place now, you can see that the market fell from there after breaking this structure in the market, and the market came very, very close to this place, whereby we have another form of liquidity, but I would love to explain it as we go further in this market. So this is how the liquidity sweep works in the market. The major function of this one is for the market to break the externals in this place, then get a new structure in the market. Then from there, we expect the market to kind of come back to another area whereby the market will just retest around or mitigate around there. From there, the market will start pushing towards the direction that the market is going. That's why I always emphasize that you should get to know the overall trend of the market whenever you want to take any liquidity in the market. Because if you don't know the overall trend, you're going to lose a lot of money in the market and you're going to regret it. So you have to kind of know the overall trend of the market. Then you can follow up with the trend while you trade the liquidity that occurs in the market as the market is moving towards the direction that you're expecting the market to get to. So this is how the liquidity sweep in the market looks like, and that is how it works in the market also. Alright, so this is another live example on this liquidity sweep in the market, and I want to explain this for you so you can get to understand it also and know how it works in the market. So looking at this place, you can see that there's a structure around this place. Let me use this tool in the market, this one that looks like cross in the market. Let me use to kind of clarify it for you. So looking at this place is a point whereby the market is expected to drop from there to the downside. But something happened in the market, which I'm about to show you right now. There was a liquidity sweep around that place. Why? Because in this place, we had some kind of positions in the market. And instead of the market to, from this side, which is this other place, that we have a long engulfing candle in the market, instead of the market to from there start going down, the market came around, got some rejections around that place. And these rejections were still signs that this was still expected to go down in the market. But instead of the market to go down from there, the market had to a kind of liquidate that area. So looking at this area right now in the market, this place, the market came and liquidated that place. Then from there we got our liquidity sweep, which is these two engulfing candle in this place, this bullish and bearish one in this place. That is our liquidity sweep in this market. And from there, the market came and got a retest at the strong resistance point in this market, which is around this place. This is the main resistance point in the market, whereby we're expecting the market to get back to. And this one was the structure that had to form in order to get traders confused and get them liquidated around that place. And then the market just came around and liquidated the people in this place, just like the way the market has planned it already. And from there, the market got a touch around this 2606.827. That was the place whereby we expected the market to get to. Then from there, the market will start dropping towards the downside. So after the market broke that structure, we got our liquidity in the market. And from there, we entered our trade for someone that was able to kind of catch up with this trade in the market. And the market did its things, man. We made a lot of money from it. And from there, the market started going towards the downside because the overall move of this market says that the market should go to the downside. That's one good thing about this liquidity sweep in the market, guys. So let me get to explain the liquidity run for you in the market so you can get to know what you should do whenever you see it in the market also. So this is how the liquidity run looks like in the market, and let me explain it for you so you can get to understand it. Just like the way we have been saying, when it comes to liquidity run in the market, we expect the market to fill in the what? The internals. Then from there, the market will continue moving towards the direction that the market is kind of going in that market. So looking at this place, we had an area in the market whereby the market has to come back and fill in. This is the place, and if you look at that place, you can see that pin bar candle around that place. Then we expected the market to kind of come back to that place. And if you look at what happened in this market, you can see that at this point, the market got some conditional moves, which were not even strong enough to keep the market going. And I'm very, very sure that this market came back trying to kind of fake it out that this is going to be a retest in this place. Then from this place, the retest will keep the market going to the upside. But due to the fact that the market has to come and fill in this last point, which is the place whereby we expect the liquidity run in the market rallied to the upside, then later came back and dropped back to where the liquidity run zone in the market, which is this place that we marked out in the market. So when the market came back and filled this zone again, we now entered our trade and we expected the market to keep moving to the upside also. So that's one good thing about this liquidity run in the market. In this place, we expect the market to come back and fill in areas whereby the market has to a kind of fill before the market will continue moving to the upside or the downside, whatever the case be in the market. But when it comes to liquidity sweeps in the market, we expect the market to a kind of break it. That's the difference between liquidity sweep and liquidity run in the market. So keep this in mind so you don't get to confuse yourself when you see liquidity runs in the market. So you can know the difference between the liquidity runs in the market and the liquidity sweeps in the market. Very, very, very important. So let's get back to the video. Let's continue, guys. This is another live example on liquidity runs in the market. And if you look at this place very well, you can see that there's a place in the market. Let me bring out my horizontal line and use it to explain it for you so you can get to understand it faster. So looking at this place, you can see that this place is an area in the market or a zone in the market whereby we expected the market to come back and fill. But instead of the market to come back to this place and fill it, the market behaved as if it was going to continue with these continuational patterns around this place. Let me use my stuff. Let me use this stuff that looks like cross in the market so you can get to understand it faster. So the market behaved as if it was going to continue rising using this continuation pattern in the market around this place. Then from there, the market started behaving as if it was going to go to the upside, even came around and got a retest around that place. But if you look at this point, you can see that there's a place in the market whereby the market has to still come back and fill. So the market had to a kind of drop down to that place again, which is around this place whereby we have our rectangle in the market. So the market has to come back and fill the liquidity run around that place. Then from there, the market kept pushing to the upside because this is an uptrend. And don't forget, before we mark this out in the market, we have to remember the overall trend of the market. So as someone that wants to take this kind of trade,
you just have to place your stop loss below the pin bar in this place, because if the market goes below that, then just know that this liquidity run in the market is not going to work. So this is how the support and resistance liquidity looks like in the market. And on this part, we have our resistance point in the market. Let me bring out my tools in the market, which is our rectangle in the market, which I'm going to use to mark this area out, which is our resistance point in this market. So around this place is a good resistance point in the market, and we expected the market to keep dropping from that side before liquidity came into the market and took it away. So look at what happens on this one. If it is on the normal one, we expect the market to kind of get back to this 2442.195, which is the place whereby we do get our liquidity sweep in the market. But this one is a support and resistance liquidity zone in the market. So look at what happened in this place. In this place, we had our first resistance in this place. We got another resistance around this place, which was not able to break this first resistance in the market. Then we also got another resistance in this point. And after the third touch, the market had to come and liquidate that place, which is the whole of this place in the market. So the market came and liquidated the whole of this area with this candle in the market. So after the market liquidated that area, the market continued going towards the downside, which is the overall target of the market. That's what we expect the market to keep going to. That's one good thing about this one in the market. And looking at this place, if we were expecting the market to kind of form a liquidity sweep in the market, then we should have expected the market to come to this 2441.987, because that's the place whereby we can get our liquidity sweep in the market. But since this one is a support and resistance liquidity in the market just came to this place, broke all the resistance points in this place. Then at this point, the market started going towards the downside again. If you look very well again, you can also see that the market just came very, very close to that place where the market liquidated again and got a retest around that place. So that was a confirmation that this is going to be a resistance liquidity zone in the market. And from there, the market started going towards the downside also. So if you look at this place, you can see that the market just came back, got a test around there, which is our liquidity point in this place. That is the place that the market came and broke the resistance point in the market. Then from there we got the retest, and from there the market started going towards the downside again. So that's one good thing about this one in the market. And this is how it looks like on the chart also. So you can get to know it and get to do the right things at the right time. And also this one is for the support liquidity zones in the market. And if you look at this place, you can see that we had some kind of structures around that place. And we expected that the market will keep pushing from that place towards the upside. But the market still came back with this long engulfing candle in this place and liquidated the whole of that area. So after the liquidation around this place, we got a retest back to this strong support zone in the market, which is this one in this place. Then from there, the market started pushing towards the upside. So looking at this place also, you can see where we got our final confirmation in this market that this is going to be a very, very good support liquidity zone in the market. So the market just came around this place, got some kind of rejections, and came and got a retest around this place. So when the market came to this our horizontal zone in the market, whereby we expect the market to get around there, from there the market to keep pushing to the upside. So the market just came close to that place, got a retest around that place, but couldn't take away this fair value gap around this place, because that's what we expect the move to keep pushing from. So the market just came close to that place, got a retest around that place. Then from there, the market started pushing continuously towards the upside. So that's one good thing about this support liquidity zone in the market. The market will just come and clear the former structures, then come very, very close to the liquidity sweep zone, or get an area whereby the market has to come and test. Then from there, the market will keep pushing towards the upside, just like this place whereby the market just pushed towards the upside and got a retest as a confirmation that this is a strong support zone in the market. So that's it, guys. Let's move on to the next liquidity zone, which is our trendline liquidity zone in the market. So this is our second liquidity zone in the market, and we call this one the trendline liquidity zone in the market. So look at what happened in this place in the market. We had the trend line in the market, and at this point, we got our first touch in the market, which is around this place. We got our second touch in this place. Then instead of the market to get back to this our trend line, to get our third touch in the market came around that place and broke it with this pin bar in this place. So immediately the market broke it with this pin bar, the market came and liquidated the other trend line touches in the market, which is this second place, and also the first place, very, very close to it. and the market continued pushing to the upside again. And if you look at this place in the future, which our trend line is still active, you can see that the market still came around that place and got a touch on it also. So looking at this place now, the market came and got a touch, and after then, the market continued pushing towards the upside continuously. And whenever you want to trade this trend line liquidity in the market, just expect that the first touch and the second touch is the major place whereby you can use to map out if you're going to get a liquidity in the market or not. Then from there, if there's any support zone around that place, just like this place in the market, that the market just came very close to, and from there the market kept pushing to the upside, then you expect the market to break that trend line, then get to that support zone. Then from there, the market will keep pushing to the upside. So on this one, we expect the first and second touch to be accurate in the market, and the third touch, we expect the market to kind of come very close to it or break it a little bit, telling us that that is not going to work in the market again. Then from there, the market will just get close to any support zone or another place. Then from there, the market will keep pushing towards the upside. So that's it, and that's how it works in the market also. So let's delete our trend line. Let's get to the third part, which is the swing high and swing lows in the market. And also we have swing highs in the market and swing lows in the market, but I would love to explain the swing lows for you so you can get to understand it and get to know how it works in the liquidity zones in the market. So looking at this place, you can see that we had a kind of market that the market was expected to kind of get to this place, and from there the market will keep pushing toward the upside. Then the market came and got a retest around that place, which was nice and okay. And after that, the market also came back after we had some kind of rejections around this place, which is this place whereby we had some rejection candles in the market. Then from there, the market came back, got another retest in this same place whereby we got our first retest. So at this point, this structure is getting weak because the more they retest in that place, the weaker the structure gets. Then the market had to kind of come back and break that structure, which is this structure in this place. Let me bring out my horizontal line and mark it out, which is this structure around this place. So the market came and broke it. Then from there, we got our second retest to the swing low in the market. So looking at this place, you can see the first swing low in the market, and look at this place where we got a confirmation that this is a good swing low in the market. Then from there, the market continued pushing to the upside. So looking at this place where we have our wick in the market, that's the swing low in this first place. And on this second place, we have our second wick in the market, which we got as our second swing low in the market, which is our confirmation that this is going to push to the upside. So after we got our second swing low in the market, then from there we got the market pushing towards the upside also, guys. So that's how the swing low works in the market. Let's look for another opportunity whereby we can kind of describe or explain the swing high in the market so that I can get to understand it also and get to know it works in the market. So let's go. And also we have the swing highs in the market whereby we got our first test around this place. Let me bring out my horizontal line. Then we got some structures in the market, which the market came around and broke those structures, which is this place in the market. Then from there, we got our candle that came to this place, around this place where we got our first swing high in the market. Then we got our second swing high in the market also. Then from there, the market kept pushing toward the downside. So when it comes to this swing high and swing lows in the market, the wick of the candle determines what is going to happen in that market. You can see this wick and the rejection we got around this place. This is a great sign that the market will keep pushing towards the downside. And from here, you can see that we also got another strong rejection candle in this place, which gave us another long wick in the market. And this one came and got a test around this place. Then from there, the market kept pushing towards the downside. So that's all about this part. Let's get to that part of this liquidity and get to explain it more for everyone to get to understand, guys. If you look at this market very well, you can see that we have our POI around this place, which is this 2173. And in case you don't know the meaning of this POI in the market, it means point of interest. So wherever we're expecting the market to get to, so that from there we can kind of push the market to the upside or the downside, whatever be the case in the market, that's our point of interest in the market. So that's how it is in the market. It's a very simple concept. And since we're expecting the market to get to this point, which is 2173.441, then from there we push the market to the upside. That area now is our point of interest in the market. And if at all I want to use another place as an example right now, let's say for instance in this place, we're expecting the market to get back to this zone. Let me mark out the zone in this place. Let's say we're expecting the market to get back to this zone, which is this place, around this place. Then we expect this area to be our point of interest in the market. Then if the market gets a retest to that side, then we have gotten our point of interest in the market already. Then from there, the market will keep pushing towards the upside or the downside, whatever be the case in the market. So after knowing a lot of things about this liquidity in the market, and you don't get to know your entries and your exits, then you're still going to make a lot of losses in the market. Because one important thing you must know in the market is your entries and also your exit. So let me just get to explain this for you so you can get to understand the market, then know what you should do whenever you see it in the market also. So this place, we're going to bring out our rectangular bars, which I'm going to mark out around this place. This is our point of interest in the market, and we expect the market to get a retest around this place. And this is where we expect the market to come back and break into again, which is our exit in the market. So looking at this place right now, we know that if as a day trader, I am expected to kind of take trade in the market for just that day, even though I get a trader push towards this downside, then from there the market gets to this upside again, we're going to make a lot of money from the market also, because this is a very, very good area. And we got a good or a nice area in this market whereby if we got an entry around this place, if we use this last point, which is this place whereby we expect that the market shouldn't break, you can see the last week of the market in that place. If we use that place as our stop loss area in the market and we got our entry around this place, we are still going to make a lot of money while we are risking something little in the market. Or if we use this pin bar around this place as our entry in the market, then the pin bar as our stop loss area in the market, we are still going to make a lot of money from the market also. Most times you see a lot of traders risking themselves to a lot of risk in the market, whereby they just open a very big stop loss in the market and think that that stop loss will help them not to make losses in the market. But that's not how the market works. There are places whereby if the market gets to, and the market gets to break that place, then expect that place not to work in the market again. But in this case, most traders don't used to think into that. But after this video, I'm very, very sure you should know that already. So looking at this place where we have this, our horizontal line in the market, just like I've said, if the market breaks below that place and takes the wick away, then we expect the market to go against us. That's why you see most traders entering the market very, very fast, because they believe in what they are doing in the market, and they know that if the market goes against them and that area, they are going to lose money in that place. So at this point now, we can have our entry in this place and use this POI, which is our point of interest, as our entry in the market. Then this place whereby we expect the market to come and break the former structure, which is the old structure around this place, because this is a change of market direction. And in this case, the market is kind of going toward the upside, which is the uptrend in the market. Then this place becomes our area whereby we expect to place our take profit around, which is our exit zone in the market. Then from there, we expect the market to kind of push towards that side, break into that place. Then we get our exit in the market and make money off the market also. Sometimes I do take my exit one candle before the main exit point in the market, just like this place where we have 8385.1. And I just take my profit out of the market, then from there the market will just continue doing its things. Because sometimes the market will just get very, very close to our exit point in the market, then from there the market will start going toward the downside again. So most times I do take my exit one candle before the main exit point in the market. This is just my own way of trading the market, and I feel like it's helping me a lot. So I think you can also try it and see if you can make a lot of money from trading that way also. So that's all you need to know about this exit and entries in the market. It's very simple also, and don't complicate this. This is the only thing you need to know about this exit and entries in the market. So let's get back to the video. Let's continue from where we stop also. So my secret strategy when it comes to liquidity in the market is the liquidity sweep strategies in the market. I love that one so much because it always works for me, and I get to make a lot of money off it whenever I trade it in the market. So looking at this place whereby I mark out with this horizontal line around this place, which is the 8243.7 in the market. That's the place whereby I mark out my liquidity sweep in this market. And I would love to bring out my rectangular box in the market so I can get to mark it out in a more professional way for you so you can get to understand it. So looking at this place now whereby we expected the market to get a retest around that place, you can see that the market behaved as if it was going to come to that place. So at this point, we got the market testing this place, which was in this main place whereby we expected the market to get to. Then from there, the market started going to the downside. We got the market coming very close to this place, trying to make this place look as if it's the main liquidity point in the market. But this place was just a retest for the market to take away the last structure around that place at that point. Then from there, we expect the market to come back to this place. liquidate these other structures in the market, then got this structure whereby we add our liquidity sweep around this place. So whenever I see these kind of things in the market and the market doesn't come back to fill this place in the market, that's the first place where we got our strong resistance zone around. Then I'll always expect the market to get back to that place, get a retest around that place, and from there the market kept on dropping towards the downside. So I love this liquidity sweep in the market, and what I always do is once I just find out an area whereby I expect the market to come and liquidate, I will just put my horizontal line around that place, which is this horizontal line that I kept around that place. Then I will take this place whereby we have our wicks in the market as my area whereby if the market goes against me and that place gets kicked out in the market, I expect the market to kind of be a failed liquidity zone in the market. Then from there, the market will just continue going towards the upside. That's telling us that the market has changed its direction around that place. But if you look at this place very well, this liquidity point was respected in the market. So whenever I see this is the area whereby I expect myself to exit in the market. So I'll use this horizontal line and mark this place out. That last place whereby we have our structure is those places whereby we expect the market to break. Then from there, the market will give us new structures in the market. So once we got this area broken in the market, we take our take profit around that place. And sometimes, just like the way I've said, I do take one candle before the area whereby I'm expecting the market to get to. So around this place, I mostly take my profit in the market, even though I'm expecting the market to break the structure around this place. I also love to show you my liquidity run strategy in the market, which I love trading also. Also, I have my liquidity run strategy in the market, which I mostly trade in the market also. And in this one, I expect the market to kind of take away the former structure, then come back and fill in the structure that is ready for the market to touch. Then from there, the market will start pushing towards the upside. So looking at this place whereby we have a structure around this place, the market was expected to get back to this, our horizontal line, which is about 8213.5, but the market wasn't able to get back to that place. So we expected the market to get around this place, behave as if it was going to go to the upside, break this former structure around this place. Then from there we got the market getting back to our point of interest, which is this place whereby we have our liquidity run horizontal line in the market. Then from there we got a retest, which the market also behaved as if it was not going to work in the market. But if I was to enter this market at this point, this week around this place will always be my stop loss area in the market. And from there we got another retest, and from there the market started pushing toward the upside. So when you're trading these liquidity runs in the market, you don't need to have high expectations like that in the market, except you're doing it on a higher time frame. So if I was to kind of enter this trade, I will place my take profit around this place, whereby I'm very, very sure that the market will come and break into it. Then from there, I will just exit the market and take my profit from the market. So if I was to enter it, I will just place my take profit around this place because I told you all that I take one candle before the take profit itself. Then from there, all I just have to do is relax and watch the market do its things, because most times the market gets very close to our take profit area, and from there the market will start behaving as if it's not going to hit our take profit or reverse against our take profit in the market. So once I just get my area and I get my take profit area smashed in the market, then I'll just expect the market to take away the last structure, just like this place, which is the last structure in this market right now. Then from there, the market continued moving towards the upside. You can see this market very, very well. So let's get back to our video. Let's talk more about this liquidity again. So just like the way I've said before, the endorsement areas are those places whereby we have the former structures in the market, and the market will start behaving as if it's going to start falling from the former structure towards the downside. Then all of a sudden, the market will just break the former structures and get to our point of interest, which is the place whereby we expect the market to get a liquidity sweep in the market or a liquidity fill in the market, depending on where the liquidity is formed in the market. And most people do a lot of mistake around that place because they think that endorsement areas are those areas whereby we expect the market to get to. Then from there, the market start going to the downside, not knowing that there's a liquidity sweep around that place that will take away that endorsement area, then get the market to a point of interest. Then from there, the market will start falling to the downside. So that's all about this one also. Let's get back to the main video.
So right now, I want to show you on how to get your top-down analysis in the market. And just like the way I've said before, whenever we're looking for a top-down analysis in the market, we have to start from the higher time frame to the lower time frame. So I'll be going to a weekly time frame because that's the major time frame whereby we get to find our top-down analysis in the market. Although we have monthly time frame in the market, but we love to start from weekly now to make the journey easier for us. Just like the way you know, every candle forms after 1 month, but we'll be using the weekly time frame on this one in order to get the things that we want to see in the market right. So on this monthly now, you can see that the market is in an uptrend, And on this uptrend right now, what do we expect in the market? We expect the market to keep buying for the meantime because the market direction hasn't changed already. So we'll keep on buying till when the market directions have changed. For instance, if the market breaks this structure around this place right now, this side that we have in the market, if the market eventually breaks it and gets a new structure around this place, then we expect some new change of market direction. But since this structure is still valid in the market and this movement has been confirmed to be a solid one in the market, so this supply zone remains a great supply zone till now. So what we're going to do right now is, for instance, if you're going to use the monthly time frame to start, we are going to bring out our horizontal line in this place. We're going to place it around this side. So around this side right now, we're expecting the market to do what? Get back to this place. But since we're on a higher time frame, we cannot get our entry around this place. So we have to drag this down to M15 time frame in order for us to get what we're looking for in the market. So let's go back to our weekly time frame round, which is the major place where we want to start from. But first of all, know the monthly movement of the market and know where the market is trying to go to. So let's go back to our weekly time frame, which is the best time frame whereby we advise traders to use whenever they want to get their top-down analysis of the market. So on the weekly time frame right now, we're going to detect what the market is trying to do. Then we get to know where we are expecting the market to get to by the end of today or by the end of this week. So right now on the weekly time frame, we're going to zoom out in order to see where the market is trying to go to. So now that we have zoomed out, we are going to discover that the market is still in an uptrend, and the market has also broken this former structure around this place. Always take note of structures whenever you want to trade a top-down analysis in the market. So looking at this place now, you can see that there's a structure around this place, this side that my stuff is, this stuff that is looking like cross in the market. So around this place, the market has taken this structure away, and we expect the market to come back to this place and get a retest around this place. So now that we have detected at this place, which we have our horizontal line, this 515160.41 is the area where we got on our monthly time frame. So we're going to drag it to an area where we expect that the market should touch. Due to the fact that we are going to the lower time frame, we have to kind of adjust it to get the exact point where we expect the market to get. So looking at this part now, we're going to drag this down to this place whereby we have our fair value gap in the market. So right now that the market is around that place whereby we have our fair value gap in the market, we are not going to stop at this point. Even though we're expecting the market to get back to this place before the move will continue, we are still going to go back to our what? Daily time frame, because that's our third time frame whenever we want to take this in the market. And this daily time frame now is where we're going to find out what is happening today, just like the name implies. So today on the chart now, you can see that the market is currently bearish. And you can see that around this place, you can see this place whereby the market is trying to drop towards the downside. This area whereby we have a breakout double top in the market. So around this place now, the market is dropping. And what do we expect? We expect the market to drop from that place to this side. It might not happen in one day, but the market will keep behaving just like the way it used to behave, going up, breaking other structures till the market gets to this place. So right now, I'll find this place to be our area whereby we expect the market to get to. We'll go back to our left hand side because that's what we use in detecting what is going to happen. It's just like an historical way of trading the market in order to get a new move or the areas whereby the market have not tested before. Then leave the areas that the market have tested before and use the places whereby the market hasn't tested before to continue the movements of the market. So looking at this place now, you can see that around this place, the market has some confirmation around that place. But in this side of the market, you can see that we have what? We have this pin bar around this place. So we expect that pin bar to be our area whereby we expect the market to get to. Because around this side now, whereby the market came around, tested around that resistance point in this place, and from there the market dropped. And when the market came close to that place already, the market came and tested it with this bearish engulfing candle in this place, confirming that this area in this market has been tested already. So right now, we don't expect this area to be an area whereby we expect the market to get back to again, but we expect this side to be the area whereby the market will get back to now. So on this side now, just like the way I've explained now, you can see that this pin bar is the valid place whereby we expect the market to get to. So we have to drag our horizontal line very well in order for it to be well placed on this market. So right now that the horizontal line is in that place right now, we are still going to go down to our H4 time frame. in order to know what we are doing in the market and get the exact point whereby the market will get to, and from there the market will now push towards the upside again. So on the H4 time frame right now, you can see what the market is still falling. And if you notice very well, the more we go to the lower time frames, the more we see more candles in the market. Just like the place whereby we were before, which is our monthly time frame and our weekly time frame, you can see that there are a lot of few candles around this place. But the more we get to these lower time frames, which is the H4 time frame, you can see that there are a lot of candles around this place. So do not get confused by the multiple candles, but get to understand the market formation that was formed before and get to know what you should do and what you shouldn't do in the market. So looking at this one right now, you can see that around this side, we got some continuational patterns in the market. And from there, the market started pushing towards the upside. And this side is looking very, very good for us to enter the market. But we still have to find that area whereby if we enter, if we place our horizontal line in that place, if the market gets to that place, the market will have to push from there towards the upside. So let's go back to this side again, which is our left hand side, because that's the area whereby we get to try and see if we can find what the market is going to do exactly. So on this side, looking at this place right now, you can see that the market have retested all this zone in this place. And that is a sign that if the market is expected to come around that place, the market is expected to break it. So we're going to use that place whereby the market hasn't retested already around that place in order for us to get our entry around that place. So looking at this place now, we're going to drag it to this side whereby we have this pin bar that hasn't been retested in the market. So around this place whereby we have this pin bar in the market, that's a good area whereby we can open and see if the market is going to come close to that place. If you look at this place, you can see this candle also in this market, but this candle wasn't able to kind of test it in order to give us that confirmation that we're looking for in the market. So from here now, we're expecting that the market should do it, get a retest around that side. Then from there, the market will keep pushing towards the upside. Even though that first place wasn't able to get that proper retest that we're looking for in the market, we still expect this side to be that area whereby we look up to and we expect the market to come back to that place. So we're going down to our H1 time frame in the market in order for us to confirm this finally in the market and get to know what we're going to do in this market also. So on the H1 time frame, we're going to find out if this market is still going to go by this direction. So right now, we're going to find this place now. Looking at this side now, we have some confirmation candles around this place that speak that the market shouldn't come around that place before the market to push towards the upside again. So we're going to find another area in order for us to put our horizontal line. Then from there, the market will now get to that place, have a touch on it. Then from there, the market will start pushing towards the upside again. So around this side, you can see that we have an area in the market whereby we are expecting that the market should get around to now. Due to the fact that the first one have been tested in the market already, which is this side in this market. So we expect that the market should come back to this area now, whereby we have an area whereby the market hasn't tested already. Then from there, we expect the move to continue. Because if we use this place now, we might keep waiting for the market and the market will never get to there. And from there, the market will start pushing towards the upside. So I'm going to drag our horizontal line back to this place in the market. So looking at this place now, we're going to drag our horizontal line to this side, whereby we have this pin bar in the market, because this side haven't been tested already, and we expect that from there, the market will now come back, get a retest around that place. But still yet, we have to go to our M30 time frame in the market. Then from there, we'll get to find out what is going to happen on the M15 time frame, because this is the major place whereby there is work in the market. And this is where, if you think what's going to happen in the market right, then from there you can get to make anything from the market also. And this is where a lot of traders lose money in the market because they don't even know what is going to happen in the market for that day. So looking at this place now, you can see that this area is having a lot of rejections in the market. And it's a good sign that if the market gets around that place and doesn't break these rejection candles that we have around that place, then from there the market will now continue pushing towards the upside. But that doesn't guarantee that this is the place whereby we're going to get our entry from. So we're going to go back to our M15 time frame, whereby we expect that if the market gets on that M15 time frame, because that's the main candle that we use in getting entries in the market. If you're with your notebook, write this down because it's going to be very, very important for you. M15 time frames are areas whereby we get our major entries in the market, while M5 and M1 are areas whereby we get our sniper entries in the market. So let's get to this part whereby we're expecting the market to get right now. So we're going to find out our horizontal line in the market, which is still around this place. So on this side now, you can see that this area has been retested, which is this area where we're expecting that the market will get to. Then from there, we get a retest around. Then from there, the market will start pushing towards the upside again. So looking at this side, you can see that we have this pin bar around this place. And we're going to place this our horizontal line around that place where we have this pin bar in the market. So this place is going to be our last bus stop, where we expect that the market should get to. Then if the market gets around this place, we are going to get our entries in the market. And looking at this area now, you can see that none of these candles that have been forming has been able to test that place. So it's a sign that that place is valid in the market and it is capable of holding this trade that is coming up in the market. So looking at this side now, you can see what's happening in the market. And as you can see, no candle was able to get around that place. So I'm going to confirm that that place is that area whereby we expect this downtrend, which is a reversal trend in the market, to get to. Then from there, the market will start pushing toward the upside. So this is how simple it is to find your top-down analysis in the market. It might take some of your time. It might take some few hours if you are still new to it. It might take some minutes for you in the market also if you keep doing it for a very long time. But now we know that if the market is expected to continue pushing toward the upside, we expect the market to get around this zone. Then from there, the market now start pushing toward the upside. So now that we have found this place already, due to what we have seen in the weekly time frame, what we'll be doing in the market is taking sell positions until the market gets to this place. Because most times you get to know these areas whereby the market is expected to come to, and sometimes you don't get to do anything around that area. And that is where the problem comes from. And that's why I see a lot of people, they keep waiting for months in order to get a trade. So right now that I've found this place, what we're going to do is go back to that our M15 time frame and expect that the market will come back to this place. But as the market is trying to come to that place, we get to the M15 time frame and we will start looking for sell positions in the market. We'll start finding areas whereby we expect the market to sell from. Then from there, we keep selling till we get to that place. So right now, looking at what the market has done in this place, you can see that the only area where we expect the market to get to, before we expect some sales in the market, right now is around this place. And why do I say that place is the only area where I'm expecting the market to get to? Because looking at this side, the market has broken this structure around this place with these two bearish candles around this place. So we expect that the market will come back, get a retest around this place, which is this 607798.64. Then from there, the market will start dropping towards the downside. So now that we're expecting the market to drop towards the downside from this side, we're not going to enter this trade right now. We're going to expect that the market will just get to this place. We'll be waiting to see what the market is going to do. If the market is going to react in accordance to our prediction in the market, then from there, if the market gets to this place, we will get to enter our trade and make money from it also. But if at all the market chooses to go with this area, which is one of the reasons why a lot of traders have their plan B in the market. Some do take a lot of positions in the market and they take it with the plan B, then the plan A, so that they don't get to miss opportunities in the market. So looking at this side now, it's another area whereby if you want to predict that, due to the fact that we have too long engulfing candles around this place, the market is expected to go towards the downside, start getting back to this upside again. You can take your entry and take your stop loss around this place. Let your stop loss be very, very close to those entry points in order for you not to lose a lot of money in the market. Because if you place your stop loss around this place and the market eventually goes against you around this place also, you get to lose a lot of money in the market. Because one thing is certain in this market, which is the fact that if the market is expected to get to this place, and this place now, which I'm going to use this cross sign, this side now is expected to be the area whereby we validate this market. If you place your stop loss around this place and the market gets to hit your stop loss around this place, then just know that that area is not valid in the market again. And do not force yourself to enter trades, especially in areas whereby the market will not get to, after breaking this other place, get something like a week around it, then continue going to the downside. Just know that somehow the market will still come back and break more of that area and continue going towards the upside. But if at all you enter this trade around this place and the market just get a retest around that place and continue going towards the downside, then just know that that area is the most valid zone in the market. And this other place whereby we expect that the market to get to won't be valid in the market. And that is how this one works in the market. And this is one of the major reasons whereby trader has plan B in the market also. But if you want to get your sniper entries in the market using this top-down analysis in the market, you go to the M5 time frame. So on this time frame now, what you have to just do is, once the market just get to this place now, you have to be among the first people that will enter the trade. And you'll be among the first people that will be risking a whole lot of money in the market also. Because at this point, you expect that if the market gets to this place, which is this side, you're ready to be among the first people to enter. And at this point, you're also one of the people that will be risking their money first. And you will be expecting that this side, which is this area in this place, will be the most valid zone for you. And if the market breaks that zone, then you know that that trade is not going to work in the market also. Then you go to your M1 time frame, whereby you just wait for the candle to just get close to that place. Once the candle gets to that place, just sniping, and that's all for you. That's how to get your sniper entry using this top-down analysis in the market also. So that's all about this one. Let's get back to the video. Let's end the video, guys. Alright, so these are the other block looks like in the market. And after explaining the structures for you, I will get to explain it on the chart for you also. So you can get to understand how these things looks like in the chart and get to know what you do whenever you see the structures in the market also. Because you have to know the structure first before you can identify what is going to happen in the chart next. So around this place now, if the other block is coming from a selling point in the market, which is a bearish market, we expect that we get a resistance point around that place, and we get an area whereby the market just come and get a retest around. And when the market comes around that place and get a retest around that resistance point, we get candles like pin bars around that place. Sometimes we get fair value gap candles around that place. Then from there, the market will now come, break this former structure. So after the market has broken this place, whereby we got a break of structure around this side, then from this side, we expect that the market to from there get to this point, confirming that this is another block area in the market. And the gap between this place and this place is called an imbalance in the market, because this is an area whereby we expect the market to get a retest around. Then from there, we can now get what we call other block in the market. Then from there, the market will now start dropping toward the downside, because this is the place whereby the institutional traders are interested in taking their entries in the market. And we should also be expecting that place to be our area whereby we'll be expecting the market to push from. And sometimes around these other blocks, whenever the market is dropping again, we get some kind of mini other blocks in the market, confirming that the market is not going to break this main order block in the market. Then from there, we get a break of structure around this place again, confirming that this structure has been broken, and we expect a retest around this side. So confirm that this one is also a strong one in the market. So when we get a retest around our mini order blocks in the market, just know that from there the market is not expected to start going toward the upside again. And this gap around this place also is called the imbalance in the market. So we expect the market to come and gain its balance around this place. Then from this other block point, the market will now start pushing towards the downside. So that's how the other block looks like in the market. That's the structure of the other block. Let's get to the chart. Let's get to explain it in a better way. Alright, so this is how we get other blocks in the market. So around this place where we have a strong resistance point in the market, which is this side in the market. This is where we got our first resistance point in the market. So we expect that the market shouldn't break that place and go toward the upside again, due to the fact that we have what? We have a rally based drop in this side, and we got a retest around that side. So right now we expect what the market should come and get a retest around this place, which the market did something that if you don't get to understand it, you keep expecting that the market should get to this place. So around this side now, instead of the market to get to this place, we got a fair value gap candle around this side. So this fair value gap candle now is going to push the market towards the downside. And someone that doesn't understand it, we keep waiting till the market gets to this place, which is not going to happen again, except the market has to come back and break that place and start going towards the upside. So around that side now, we expect our other block around that place. So we're going to bring out our rectangular box in the market, which is this in the market. Now we're going to place it around that side. So around this place where the market came and gave us a fair value gap candle in that place, we expect that area to be our other block area in the market. So looking at what happened in the market right now, you can see that the market came around that place, and from there the market started dropping towards the downside. And this is the place where we got the other block itself. So this place is just like an area where we got a proper confirmation that this resistance point was not going to hold the trade for us anymore. So around this place now where we got this proper confirmation, we expect that from that place we get our other block around. So looking at this place now, you can see this pin bar around this place, you can see this rejection candles around this place, and these are signs of other blocks in the market. So we're going to bring out another rectangular box and place it around that place, because we expect the market to start falling from there to the downside right now. So around this side now we have a new rectangular box in the market, and we expect the market to come and get a retest around that place, Then from there, the market will start dropping towards the downside. But one thing you must take note of is whenever other blocks want to form in the market, it doesn't form immediately. So around this side now, you can see that if I use this thing that looks like cross in the market, from this place, the market came and broke these former structures first. So after the market broke this former structure in the market came and got a retest. It did not just happen all of a sudden. Let me place my horizontal line another place. This structure in the market got broken. This one like this got broken in the market. Then from there, the market came and got this retest around this place. So around this side, whereby the market broke that structure with these candles in this place, is the area whereby we'll get our retest towards this side. And this structure that was broken around this place is our what? Break of structure in the market. So looking at this side now, let me show you something. So when the market came around that place, the market came and got a retest towards the zone whereby we expect the market to get our orders from, which is our other block area in the market. If the market came, broke this former structure and gave us a retest around this place, this could have been a very fast other block area in the market. But since the market wasn't able to break it and give us a retest another place, this becomes an area of imbalance in the market. And what do we expect in other blocks? Other blocks are expected to come and balance areas so that we have imbalances in the market. So around this side now, we expect that the market should come and get a retest around that place. Then from there, the market start dropping. And if at all the market went and broke this former structure in this place, the market is expected to change its movement to an uptrend, because this place is the major structure, which is the major resistance point that is holding this trade. And we expect that from here, the market will now start dropping towards the downside. So look at what happened right now. When the market came around this pin bar in this place, this zone around the side, the market just came and got a retest around that place. Then from there, the market even got another retest another side, confirming that this is going to drop towards the downside. So this side whereby the market wasn't able to break, we expect that the market will still drop towards the downside. And the market dropped from there towards the downside. But something happened around this place again, which is the fact that we got another mini order block around this place. And before we got this mini order block around this side, which is this side of the market came and still what? Broke this former structure in this side. So this new structure now got broken, and from there we got another mini order block, which I'm still going to mark out for you so you can get to understand this also. So around that side now, we got a mini order block in the market. And what do we expect again? We expect that from there the market will come and get a retest. Then from there the market will start dropping towards the downside. Looking at this place now, the market broke this former structure, came and got a retest around this side. Then from there the market started dropping towards the downside again. And around this side also is another order block area in the market. If you look at this place, you can see a lot of rejections in the market also. And we expect that from there the market will still come and get a retest around there. Then from there the market will start dropping toward the downside also. So look at what happened. This is another rectangular box in the market, and the market came another place and got a retest. Then from there the market started dropping properly towards the downside. So this market came and gave us what? 3 strong confirmation that this other block area is still going to hold in the market, and the market is going to go towards the downside. And whenever we want to take these other blocks in the market, like we want to trade it in the market, these are areas where we expect our take profit to be around. This place whereby I'm going to place my horizontal line right now, which is the last structure around this place. That's the area where we expect our take profit to be around. If we are to take our trade from this place now, which is this area, towards this side, the risk to reward ratio is very, very good. And if we are to take our trade from this place towards this side, the risk to reward ratio is very, very good. And if we are to take our trade again from this side towards this side, the risk to reward ratio is not that bad. So whenever we want to trade other blocks in the market, we use this area whereby we expect the market not to break again. We use those places as our stop loss areas in the market, because we know that if the market breaks that area, the market is invalid around that place again, and that other block is not strong enough to take the market toward the downside. And looking at this place also, if we got our trade around this place and we got this retest around this side, we expect that this place whereby we have our wick around this place should be our area whereby we expect our stop loss to be around, and this place still remains our take profit area in the market. Because whenever we have other blocks in the market, we expect the market to break the former structure, then give us new structures in the market also. Looking at this place now, you can see that if we were to enter a trade around this place also, which is this side of the market, we will expect that we will take our entries around this place and we place our stop loss around this area, which is this place about our wick in the market. Because around that place, if the market was to break that place, we expect that from there the market will keep pushing towards the upside. But since the market wasn't able to break that place, which is this area and this place, this zone around this place, we expect that from there we just place our stop loss above that area. Then if the market kept going towards the downside, we will always expect this place, which is our last structure in the market, to be our take profit area. And from there, you can see what the market did. The market came, got a retest around that place, and still got to broke this area in the market. And looking at the many other blocks in the market, you can see how those ones form the market also. And from there, the market continue pushing towards the downside. So that's one thing about it. And if you get to understand it very well, you get to make a lot of figures for yourself also. So that's how the other blocks works in the market. Alright, so here's a perfect example of this liquidity graph in the market. And I would love to explain it for you in such a way that you get to understand it and get to know how these things works in the market also. So look at this place now. I'm going to bring out my horizontal line in the market so you can get to understand what I'm trying to explain in this market right now. So around this side, we have a good resistance point in the market, which is this part. I'm going to place my rectangular box in the market also so you can get to understand it faster. We expected that the market should come around that place. Then from there, the market will now get a retest around that side because a lot of orders are going to be placed around that place, especially for people that use all these buy limit and sell limit in the market. They're going to place a lot of orders around that side because that's the main place where we expect a retest in the market. So when we're expecting this to happen, the market started dropping from this side, then broke this former structure around this place. And when the market broke this former structure, we started expecting some change of character in the market. Then from there, the market now came and got some retest around this place. But instead of the market to get a proper retest around this side, which we expect to be our liquidity grab area in the market came very close to that place and couldn't get a retest around that place. And around this side, you can see that the market just came very close to this place, came and dropped again, just came and got a retest around this area in the market, also in the market, this supply zone. Then from there, the market came, got a liquidity grab around our point of interest in the market, which is this place where we have our rectangular box in the market. And from there, the market started dropping toward the downside. So when the market came and got that liquidity grab around this place, you can see the kind of candle that was formed in this side. You can see this pin bar in this place, very tiny, with this long wick in the market. It's a sign of solid rejection in the market, and from there, the market started dropping toward the downside. So whenever we have areas whereby we expect the market to come and fill in, and the market just come very close to that place, expect another candle that will fill in that place, either a long wick candle or an engulfing candle coming to fill in that place. Then from there, the market will start dropping properly toward the downside. So when we got that feeling in the market, we get our liquidity grab in the market. Then others around this place, people that place their buy limit in this place, sell limit, sell stop limit, buy stop limit, and every other orders that is in the market, we get triggered in the market. Then from there, the market now start going towards the downside. So that's how the liquidity grab works in the market. Let's get back to the video and continue. Alright guys, so this is how to trade using the price action of the market, guys. So the first step is go to your weekly time frame. The time frame I mostly go for my analysis in the market. Then from there I get up to my M15 time frame, which is the place where I get to enter the market. I gotta make quality entries in the market, guys. So on this weekly time frame right now, you can see that the market is a kind of bullish, but there's some kind of indecision around this place. So you can't just come and get your entries on the side. Okay, let me just take this away. Although I've analyzed the market already, so let me just take it away and, get into it afresh again. So on this time frame now, this is what we are seeing in the market. And the question now is, where is the market expected to come around? Then from there, the market now start rising again. So I'm going to use this, my horizontal line, to spot out areas whereby the market has tested already. Around this side, you can see that the market has tested this whole area in the market already. This side have been tested already, so this is not going to be valid for us again. So I'm going to take my horizontal line to this part, which is this point in this place. The market hasn't tested that place already, so I'm going to expect the market to come around that side, but not just expecting it on this higher time frame. I will have to go back to my D1 time frame in the market, which is where I get my daily analysis in the market and get to still know what the market is trying to do. So on this D1 time frame now, something is going on in this market, and it's because of this indecision candle in this place. So this candle around this place is trying to push the market towards the upside, but let's see if that's going to work out for us, guys. So we're going to drag this horizontal line from this point now to this part whereby we have an indecision in the market, and the market is not even expected to break that place right now, except the market wants to change its trend and start going towards the downside. So let me take my horizontal line to that place right now, which is this point. So right now that I've taken your market to that place, you can see that you're following up with what is happening in the market, following up with what the market is doing, and you're trying to react along with the price action of the market currently. So right now you have to check out this place to know if this place is going to work out. So around this side down, the market came, broke into it a little bit, but we're going to check out if this
place whereby the market broke it a little bit is as strong as what we're expecting in the market, if that place is going to take the market towards the upside, or if at all we should expect another area to take the market towards the upside. But trust me, if at all the market gets to break the whole of this place, then we expect the market to see drop towards the downside massively, then take away the whole of the structure, or get to the last part of this structure, then from there the market now start rising towards the upside again. So two things are going to happen right now, which is this place whereby we expect to be our overall area, whereby if at all the market gets to break, we will get to lose quality money in the market. And this is the place whereby we're expecting the price action to push the market from. Then from there the market now start rising towards the upside. So I'm going to go back to my H4 time frame in the market. In this my H4 time frame now, I want to check out what the market is actually doing. I will go back to that place whereby I've been trying to mark out, where I get to get my historical movement of the market and get to know what the market is trying to do. So around this side down, you can see that this place have been tested somehow. You look at this place now, you can see that the whole of this place has been tested. This place has also been tested, and right now the market is trying to come and get some kind of confirmations around the side to push the market towards the upside again. So I'm expecting this place to be the area whereby I'm trying to get my entry in the market. You can see this place, the market came, got a pin bar around this side, and around this side the market came and got a retest towards the side. So this place has been tested already. Anything I'm expecting in this place now is not going to be valid again. So I'm going to take this plan A in the market out. I'm going to delete it right now. That place is not valid in the market again. So it's only this place that is valid right now. We have to mark it out in a very good way to drag it up a little bit so it can get to match with the body of the candle, guys. So right now that our horizontal line is matching with the body of the candle, let's go back again and get to see what is happening in the market right now. So if I thought I was even expecting the market to come back to that place, I could have expected the market to get entries around that side. So around this side now, something happened, and this is the place whereby indecision came in again. Around this side, we got this bearish engulfing candle, and we have a pin bar and a bullish engulfing candle. If I thought this pin bar has been taking the market now, we expect this market to go against us totally. But right now that the market is trying to follow up with the current price action, which is this place whereby the market came, got to break this whole area, break this place whereby if I thought the market went far to break this place, could have got a retest around this side. But since the market wasn't able to go to this part to break this place, now we got a retest around this side, came on both side, formed some kind of structure in this place, and the structure is pushing the market towards the upside. So right now that the structure is pushing the market towards the upside, another thing is going to happen in the market, which is the fact that the market is still trying to make sure that this place gets to push it towards the upside. But you have to know what the market is trying to do, then from there you can get to make money in the market. So right now around this place, we're going to drag our horizontal line to this part. Around this side now, the price option of the market is trying to tell us that this is the place where the market is expected to come around. Then from this side, the market now start rising towards the upside. So I'm going to drag our horizontal line to that place. You can see that we're following up with what is happening in the market. We are not doing guesswork in this place. And we're going to follow up till we get to that place whereby we can stop. So right now that this entry point has been spotted in the market, what we're going to do next is try to know where the market is going to come around. Then from there, the trade is going to work out for us. So in this part now, we're going to drag our horizontal line towards the upside, because this place has not been tested. You can see all these engulfing candles that I'm using to get confirmations in the market. Try to use them and still get confirmations in the market. Use the body as the place whereby you get to place a horizontal line around. Then let the week be your area of risk in the market, because that's how the market works. Actually, I believe you can write this down so you can get to also memorize it and get to use it as many times as possible. So right now that I've found this place also, we are going to go to our H1 time frame in the market. On this H1 time frame in the market, what are we trying to spot also? Since this is an uptrend, we still have to spot areas whereby the market should come around, get a retest. Then from there we keep rising toward the upside. So around this side now, you can see what the market has formed already. Around this side, you can see that the market has tested this place already. So look at this place now. Let me show you something. This is a pin bar in this place, a bearish pin bar in this place, very strong one, trying to confirm all of these rejections around this place. Then from there, the market came, took away the structure away. So since the market took away the structure away, the market was expected to come and get a retest around this side, and the market still came again, got another pin bar, confirmation, strong one. And after the market got this pin bar around this side, the market still got another pin bar in this place. So this second pin bar in this place is going to be our area of entry in the market right now. So we're going to drag our horizontal line to that part. because we're following up with what is happening in the market, and that's how we actually make money in the market, by following up with the trend of the market, which is the price action of the market, guys. So right now, this asset now, we're going to drag this up, which is our horizontal line, to get to touch the body of the candle. So right now that our horizontal line is touching the body of the candle, we have to go down to our M30 time frame. You can see how crazy this is, in order for us to get our accurate entries in the market and get a loose little if at all the market decides to go against us. So on this asset now, look at what is happening in the market also. The market came, broke the whole of this structure away, and after this structure had been broken by these entries in this place, look at the market trying to come and get a retest again. Then if after the market gets back after breaking this whole place with this candle, then come and get a retest around the side, then know that this entry is going to be as strong as anything, guys. These are areas whereby people get to stack a lot of accounts using a lot of lot size, and they still get a win because they know what's happening in the market. That's why a lot of people get to stack, and you can't stack in the market because you don't know what's happening in the market, and you see everything as luck in the market. And you're too careful to grow up to become that kind of person that can take a lot of stacks in the market and get to make crazy figures in the market, guys. So around this side now, I'm expecting the market to come back to here, this place in the market. So two places are going to push this market to the upside, but the first place remains this place where we have in the market, guys. I'm expecting this place to push the market to the upside, even though the market can still come around this side and still get a push on the upside. But I'm expecting that whole place, like the whole of this place, is my stop loss area in the market. So right now we're expecting the market to draw to the downside due to the price action of the market, which is the market coming back, get a break from our structures, then come and get a retest to the new structure. Then from there the market now start rising towards the upside. So right now that I've found out what's going to happen in the market, we are still going to find out where we are expected to take our take profit in the market. That's why you have to be very, very realistic in terms of taking take profit in the market. So around this side now, this is going to be a take profit in the market. This place I'm going to mark out right now. This place, that is your take profit in the market, and that's why you have to make sure that whatever you're doing in the market, get to follow up with what is going to work out for you. Do not place your take profit in areas whereby the market to keep trying to take out and stop like that. Because sometimes I see a lot of you trying to use the overall trend of the market as your take profit in the market. Even though we try to go back to this place and get to use this whole place, which is this side now, as our take profit in the market, we are still going to make a crazy figure. But no, we don't have that time to be expecting unrealistic things to happen in the market, because the market direction can change anytime, any day. But still on that, you have to use the most realistic take profit in the market to get to take your profit in the market and get to make money for yourself, guys. On this M15 time frame, let's get to check out the lot size that we get to use, and we get to make reasonable figures in the market, because that one also matters in the market. So for instance now, this is where we are trying to risk in the market. Let's open our lot size in the market. We use 0.01 in the market. Let's use this that we use in placing stop limit and buy limit in the market. Okay, for instance, we get to place this now. We get to lose how much? $1.2 in the market. And if we get a win, how much are we going to win? Very important, you have to ask yourself this question every day as you try to take trades in the market. So on this place now, we get to make 36 in the market, guys, using the lowest lot size. For instance, I get to increase my lot size and use something like 0.5 in the market. And we get to win what? 183 in the market, guys. And for instance, I get to change everything to one lot size. Then I get to risk $12 to make 366 in the market. For instance, I have an $100 account right now. I'm going to use this because risking $12 to make 366 is a very good risk to reward ratio, and this is something that will happen within the space of one day. It's not like you're going to take forever for it to happen. So right now on this now, this is a very good risk to reward ratio for me. I'm going to take it with the Signal members in my free Telegram community if the market gets back to that place, guys. So if you haven't joined the Telegram community, do well to join the Telegram community also. Let's get the trade together and get to make money in the market, guys. See you on the other side, and that's all for this video, guys. Alright guys, so to get the perfect entries in the market, there's always two time frames for entries, and there's always another one for exit in the market. When it comes to these entries, we get our entries at the higher time frame because that's how you get to know the overall movement of the market. So whenever I want to trade, this is how I trade. I go to the weekly time frame, and on this weekly time frame, I get to know what is trying to happen in the market. Just like these places whereby the market is behaving as if it's going to rise to the upside right now, but there's no clear sign that this is going to happen, and there's no structure yet that I've drawn out as the place where I'm going to use for this movement that's going to happen. So what I'm going to do now is find a place whereby the market hasn't tested before. And on this place, you can see that the area has been tested already. The market came, broke this former structure, form a new structure around this place, and got a retest around the side. Then from there the market came and was able to take the whole of this place away. So right now that we have this movement in the market, we're going to look out for a place whereby the market should come around again. Then from there the market now start rising towards the upside. And on this market now, this is what I'm seeing. I'm seeing the market coming around this place. Then from this place the market will rise again. But we can't just conclude on this time frame, so we're going to mark this place out on this one. Then we go to a lower time frame to get to know what the market is trying to actually do. But one thing about this market is that since we're expecting this market to drop to the downside and we know an area but we're expecting the market to drop already, we will still day trade it back to this place. So right now I'll be entering my D1 time frame in the market, which is another time frame I used to get my perfect entry points in the market. So right now that I'm still finding my entry point, look at what I'm going to show you. This is that first place whereby the market came and got a retest around. Then after the market got a retest, the market came, broke it a little bit. So after that, this place, the market broke it a little bit. So this is the only area that can push the market actually toward the upside right now. But this area cannot push this market toward the upside. So we're going to use this place as the area where we're going to expect the market to come around. And then if I thought the market comes around that place, we will get to enter. So on this place now, we're going to drag this a little bit toward the upside. Then let's get to check out what the market is actually doing. So the market is very, very close to it already. That's a good sign. And let's go to our H4 time frame, which is the third time frame that we use in finding out our entry points in the market. Because one thing is that entry points are being found on the higher time frame. Then we get to enter at the lower time frame, which is M15. But the spots are being marked out on the higher time frame, which is W1, D1, and H4. That's how you mark out the areas where you should enter if I thought you want to enter any trade and get to make something reasonable from the market. So right now, let's get to check this out and get to confirm if this place that we're expecting the market to come around is going to work out. So around this side now, look at what the market has been doing. The market has been pushing all this way, but this place that we expected is going to be the area where we're going to take the market towards the upside. So let's get to place it very well. So around this side now, we expect that place to take the market towards the upside. But still on that, the overall movement of this market is still around this place. So that means from this upside, the market can rise towards the upside. But if the market gets to break the whole of this place, then this movement is not going to be valid again. So right now I've spotted our entry point, which is from W1, D1 to H4. Our next move is to go back to our lower time frames and get to see what the market is actually doing at this point. So on this lower time frame now, the market is still dropping, and on this side you can see this retest around this side. So the market came, got a retest. This is a very, very good one. And from there the market started dropping massively towards the downside. So imagine getting to enter here, you are going to make a lot of money as someone that's expecting the market to come back to these zones now. And right now that all this has happened, let's go to our H1 time frame and still get to confirm if at all we can still find a spot where we can enter. Although this is very, very close already and we may not enter at that point. But sometimes if you want to day trade, you can still day trade if you know what the market is actually doing by following up the candlestick behaviors of the market. So right now, this is the last place whereby the market came around and got some kind of rejections. So I'm going to check it out on our M30 time frame in the market and get to see if we have any chance of getting into the market and getting to make money. So since we have a lot of rejections around this side, we're going to check out our M15 to get to know what the market is actually trying to do. So on this M15 now, you can see I'm following up with the formation of the market. I'm following up with the candles that have been from the market and the reactions from those candles, because that's what makes you a trader. The ability to know the behaviors of this candle is what makes you a trader. If you don't know how these things works, you have to go back and start learning the chart. Start focusing on the chart, trying to know what the market is actually doing. Because all these things means a whole lot of things, and the more you get to know them, the more accurate your entries and exit becomes in the market. So right now on this page, you can see these rejections around this side. And after these rejections, the market started dropping to the downside. So right now in this market, if the market is expected to come back to the upside, we expect the market to come around this side right now, due to the fact that we have what? We have a pin back candle around this side, and when market break former structures, it gets to get up to the upside again and form a new structure. So from this side to this side now, it's like an entry point for us. And sometimes we can still use this other block candle in this place, which the market has come around, and the market has also tested it also. So we can also use it to get into the market and get to make money also. So around this side, you can see that the market came very, very close to this side and the market didn't get to break it. So since the market didn't get to break it and the market didn't get to touch it, then this is going to be our entry point at this point. So at this point, we expect ourselves to enter the market in this place, and from there we get to make entries on this market and get to make money in the market, guys. and this is just like a plan B for us, which is we following up with the trend of the market. But the major plan is this one on our H4 time frame in the market. You can see that on this place we're expecting the market to come. Then from there we get to enter the market. I'm gonna make crazy figures in the market. This place where we have 8037.3 in the market. So I expect the candles to come around the place. Then from there we get to trade the market and get to make money in this place, guys. So this is our perfect entry point in the market, and this is our trend entry point in the market. So we follow up with the trend of the market in this place, we get to come back to this place and we still get to make money, which is the major thing that every trader is actually looking for. Money, 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 money. So if you're not making money, it's your own business, because you're not following up with the two things that happen in the market every day. One, the trend of the market, and two, the reversal points of the market. So if at all the trend of the market doesn't favor you, the reversal points will favor you. That's why they call it a game of probability. And the reason why I'm doing probability is because you have entries, you have points where you should be expecting the market to enter, that you don't just wake up and, get to enter the market like that. It doesn't work that way. So right now, I mark out these two things in the market. Our entry point for this movement now is this place. And if you get to risk in the market, let's get a check out how much you're gonna get. So right now, let's go back to our H4 time frame. Let's get a check out completely what we're gonna risk in the market and how much we might make. Although we can still check it out on M15. Alright, for instance, I get to use the lowest lot size right now. If at all I get to enter around this place. So around this place now, I'm gonna drop my sell limit in this place. I'm gonna place my SL on top. So if I risk around this side, I'm gonna risk $2.6 to make how much in the market. So this is 2.6. For instance, I want to risk toward the downside again. I'm gonna make about 19 in the market. But if I want to risk from this place now to this place where I'm expecting to be my entry point in the market, let's go back to our H4 time frame in the market now. So on this part now where I'm expecting the market to come around. Okay, let me get to use it like this. So for instance, now I get to enter the market in this place, from this place now, and my take profit is around this place. So this place now is about how much? $33 in the market. And don't forget, you are risking how much? 2.60 in the market to get 34 in the market, man. For instance, I get to increase my lot size. This is just the lowest lot size, or this is not an increased lot size. For instance, I get to increase my lot size using 0.05. That's to say that I'm gonna make 174 in the market. And if I get to increase my lot size very well and I get to use one lot in the market, one lot on stepping desk is not too big. So we're gonna make 343 in the market. Let's get a check out how much you're gonna lose if you get to use one lot on this, man. So on this place now, we're gonna check out again. Let's bring our sell limit to this place and our one lot size in the market. That should be about, okay, that's about $24 in the market. So we're gonna raise $24 to make 300 and something in the market, man. Isn't that crazy enough? Isn't that good enough for you to use it and get a lot of money in the market? That's why a lot of people use big lot size to get bigger money from the market. But right now that you don't have a big account, you can still get to use 0.1 in the market and you get to lose 2.40 to make 34 in the market, guys. So the risk to reward ratio is very, very good. And your exit point now is that place where you're expecting reversals in the market. So right now, this place where we're expecting reversals, just like I've marked out, is my exit point. So right now, this place where I'm expecting reversals in the market is my exit point. And the place where I'm seeing the trend of the market coming from is my entry point. And still, this place that I'm expecting this reversal is still going to be my entry point at some point again, which is if the market comes to that place. So that's how these two things works in the market. Just be patient with the trade and let the market do its things. Don't rush anything. Don't be emotional to close anything. Just focus on yourself. Focus on what you have analyzed and believe your analysis. Then from there you get to bag a lot of money from the market, guys. But if you keep doing this game of, I enter today, I get to close fast because I'm afraid, or nervous, fear of missing out, or sometimes fear of holding trades. No, it doesn't work that way. Except you don't want to make money from the market, guys. You have to have the mind. You have to have that strength in you that will give you that hope that, okay, this is going to work out, and you cannot stick to it, man. From there, you got to make money for yourself. If you get to analyze 5 to 10 trades and you get to win all, or get to win at least 7 or 6 out of it, you still going to be very, very profitable because you always lock in a lot of good profit in the market, guys. So that's how it works in the market. And let me get to conclude on this video, man.
Alright guys, so let me show you on how to trade synthetic indices. And just like the way you can see volatility 51x right now. You can also see stepping there's volatility 10, volatility 100, volatility 25, volatility 50 and volatility 75. So these are the assets that I trade whenever I want to trade my synthetic indices, and I don't want to trade too much asset. That's the main reason why I have this asset to trade in the market. I still feel like reducing my assets in the market because I just want to be trading at least 5 pairs in this market right now instead of trading all of them. So let's get a chart now so I can show you on how to trade these synthetic indices. Just like this 51s right now, the first thing you do is go to your weekly time frame. And when you get your weekly time frame, you have to first of all mark out the areas whereby you expect the market to ever come back to. I think I should just remove it so you guys can get to learn. Okay, let me just remove all of them so you can do it again, so you can get to see it and get to know that what you're doing in the market is actually okay. So around this side now, this is the place whereby the market came and did what? Got a change in market direction. Around this side, the market came and got a double bottom in the market, and after then, we got some kind of rejections around this side. This is on the weekly time frame. Get to know that. After the rejections, what the market did again was getting back to that place, get a retest around that side. If at all there was no rejection around this place, what we could have been expecting from this market is the market getting back to this place, which is this side. Then from there, the market now keep rising towards the upside. Then after this place now, the market now come back and get a retest around the side, if at all we didn't get those rejections around this side. So now that we have these rejections to this place, what do we expect the market right now? For the market to come to this place, get a retest, then after getting that retest, we get to push to the upside again. So just like the way we have a retest in this place now, you're gonna drag this horizontal line back to this place. So around this side now, the market got a fair value gap candle in this place, and this fair value gap candle is responsible for any movement that's happening around this side now. So since we have a fair value gap candle in the market, we expect the market to get back to this place now, which is this area where we have this fair value gap candle in the market. So I'm gonna drag this horizontal line back to this place. So around this side now, we have horizontal line in the market, and you can see that the market have tested it already. Using this pin bar candle in the market have tested it already. So now that the market have tested it, what do we have to do? We have to go back to our daily time frame right now because we have confirmed everything that we need to confirm on our weekly time frame. And so we're going to go back to our daily time frame right now and get to know if at all the market is going to go with this analysis right now. So on our daily time frame right now, you can see this area whereby the market came and did what? Got some kind of rejections around this side. And after the rejection, the market started coming around that side. Then from there, the market started going towards upside again. So here's a very good retest around this side. The market came, got the retest around this side, got another retest again, which is confirming that this area is valid in the market. So now that we have this retest around this side, telling us that this market is valid in this place, then what do we expect again? We expect the market to come around that side. So after getting this retest in this place, which is this one in this place, we expect the market to go to the upside. Probably we'll get some kind of retest around the side. Then the market now keep rising. But look at what happened. The market came around the side after breaking this place. And the market didn't get to, break this place properly. Then from there, the market now come and get a retest around that side. So since we didn't have the market break this place, come and get a retest. Then from there, the market now break this place. Then continuously, the market now start rising. By that method or strategy in the market, that's why the market dropped towards the downside continuously. And after the market drop, the market has to brave as if it's going to take this place away. But since the market didn't get to take this place away, that's a side of strength in the market, and we still expect the market to still rise towards the upside. So right now, what we're going to do is we're going to drag this our horizontal line in the market to this point, because this is the place whereby we got our last test in the market right now. Look at this place, this is a retest to the side, and it's confirmed to be a strong one also. This and that retest to the side, and this one is also confirmed to be another strong one. So now that we've gotten this already, we need to do what? Go back to our H4 time frame in the market in order to know if at all what we're analyzing is still accurate in the market. So on our H4 time frame right now in the market, let me get to show you something also. So on our H4 time frame right now, you can see what the market is doing. This is the area whereby the market got a retest around. Look at this place where we have our second shoulder in the market, and this where we have a double bottom in the market. So around this side now we have a double bottom pattern in the market, and this retest to confirm that this is gonna move to the upside. So now that I've gotten this retest in this market, so this is what we get to expect now. We expect the market get to break this, then from there the market now drop towards the downside again. This is why you need to be very, very active and very calculative whenever you want to take any trade in the market. So around this side now, we got some kind of rejections around this side, and these rejections are one of the reasons why the market is not going to drop towards this side again. So since we have these rejections around this side, this is a place whereby the first rejection happened and the market came and did what? Broke it. So let's get to our lower time frame, which is H1 time frame. Let's get to know what made the market to break that rejections around that side. So we're going to place our horizontal line around this place whereby we got the first rejection in the market.
so we can get to know what happened, that we got a new rejection in the market. So let's go to our H1 time frame in the market. Let me get to show you something also. You can see how I'm taking it step by step. That's how you get to trade the market, because you don't just wake up and see the market buying, then you rush and get to buy. No, it doesn't work that way. So let me show you something now. So due to the consolidations around this place, what do we expect? We expect the market to come around this side, and from there the market now rise. So the market came very, very close to this place, which is this side now. And around that side, the market now picked up and start rising again. So around this side, it's like an area also in the market whereby if I thought the market gets around, the market will still rise. But if I thought the market took the all of this one away, then we could have it in mind that this is not going to push the market towards the upside again. So since we didn't get out in the market, and the market came very, very close to that place, this place becomes our new words, our new market movement. So around this side now, it's another movement in the market. Let's get back to our M15 time frame so you can get to understand what's happening right now. So the M15 time frame, you can see what is happening. You can see this candle around this side, this strong rejection candle around this side, telling us that the buyers are back in the market and they want to keep the market going. So around that side now, you can see the candles that formed after it. You can see we have engulfing candle in this place. You can see another candle in this place continuously, and we have a lot of rejections candles in this place. So right now, what do we expect in the market? Due to the fact that we have a lot of rejections candle in the market, we expect this place to be our next movement or our next point of entry. Around this place will be our next point of entry in the market. So look at this place now. Let me show you something. So around this side now, these rejections have been tested already. This place has been tested already. This one is like another test toward this side. But two things are going to happen in this market, which is either the market gets to push from this side towards upside, or we get to wait for the market to drop towards the downside again. Then from there the market now start rising toward the upside. But the major one that they're expecting the market is for the market to get to break this structure around this side. Then after breaking this structure around this side, we get the market back to this place. From the look of things, the market has broken it a little bit, but not too far like that. So let's get to see what the market has to do. Let's get to see if the market is going to come back and get a retest around this side, or if I thought the market is going to go by this way, man. Trading the market, you can use this place as your entry point and this area as your stop loss area in the market. So around this side now is going to be our stop loss area in the market, which is this place. Look at it now. This is our stop loss area in the market. This place whereby I just tap right now, where we have our 209811.43. That's our stop loss area in the market. And this place whereby I'm going to mark out right now on my daily time frame or on our higher time frame is going to be a take profit in the market, because we expect this place to be taken out in this market right now. So around this side now is going to be our take profit in the market. If you calculate the risk to reward ratio, you know that you're not playing the market. So let's get to do this. Let's say we use let's check our loss size in the market. Let's get to reduce it. Alright, this is volatility 51x. And 0.05 is the lowest loss size we get to use on this, but you can still use 0.01 in the market, due to the fact that if you use little loss size, you won't get to make crazy figure the way you want in the market. But for someone that's using a very small account, you can use lowest loss size and still can make money, because 51s is also another volatile pair in the market. But if you get to know what you're doing, you're gonna make money, guys. You're gonna make money. So I'm risking how much now? Risking $11 in the market to make how much in this place? 11 to make 106. You can see that's about 1 to 10 risk to reward ratio in the market. And if I want to increase my loss size to say, let me use 0.1 in the market, 0.1 in the market. So if I want to use 0.1, I'm going to risk how much? 111 to make $1,000 in the market. That's crazy risk to reward ratio, man. That's crazy. And if I still want to use my lowest loss size, which is 0.005, I'm gonna risk how much? Risk $5 to make $53 in the market. So if you're using an account of $10, $20, you can still use this to raise it little by little. Then from there you get to rise till the point that you can use a better loss size. But I will advise you most solemnly, if I'm someone that is using that kind of account size, I will use 0.1 in the market. 0.01, sorry. I will use 0.01 in the market, because I don't have enough time to, wait for this too much stacking of trade. Then from there you get to lose or get to win big money in the market. But if I thought you get to win around this side, you still get to win on it or something. So the reward is better compared to someone that's using 0.005. So 0.01 is very, very good. Alright, let's get back to our M15 time frame in the market. So on our M15 time frame right now, you can see that the market is doing what? Getting some kind of rejections, and due to what I can see, the market has broken this place already. So now that the market has broken this place already, we expect the market to come back and get a retest around the side, because synthetic indices respect structures very well, and whenever you want to trade, you have to follow up with the structure of the market and get to do what the market is doing, so you can get to make money on synthetic indices. Now that the market has broken this side, I'm gonna wait for the market to get back to this place. Then from there, we keep rising towards the upside. So that's what I expect in this market, and that's what you should be doing whenever you want to get a trade. If I get to enter around this place, it's not that I'm not going to make money, but still on stay, you have to do the right thing so that whatever the outcome is in the market, it will be something that you can bear in mind. For instance, I get to enter around that place. Okay, let's say we use 0.01 in the market, then we'll be risking how much in the market. Let's check it out. Alright, we're risking at least, okay, we'll be risking $19 in the market. Alright, almost $20 in the market. That's what we'll be risking. But if I thought we get to enter around this place, we'll be risking how much? $7 in the market, man. You can see how the risk to reward ratio is right now. 7 to make 100, and the other side is 20 to make 100. Not still bad, but we'll get to enter the right spot, so you can get to make money the right way, man, and don't get to lose big if at all the market goes against you. So that's how to trade the synthetic indices, most especially this volatility 51s. We can still apply this on every synthetic asset and still get to make money in the market. Synthetic indices are not that manipulated, just like the way we have the currency pairs, very, very manipulated, and a lot of news affecting the market and stuff like that, bro. But these synthetic indices are very, very okay, and if you get to do the right things, trust me, you're gonna make money for yourself also. So that's the end of this video. Let me get to conclude, guys.
So, alright guys, look at what I was explaining that time. Right now, you can see the market just came back to this place again, and from there, the market is rising back towards the upside. So if I was active in the market, get to enter on the side, I could have still been profit by now. And that's the sign that what I just taught you guys is actually working in the market. And if you get to use it the right way also, you get to see results for yourself. So we're expecting the market to come back to this place, and the market is back to this place again. Got some kind of rejections around the side. But look at what happened. No matter the rejections around the side, the market didn't get to take this place away like this, or rejection on this place wasn't taken away, and all of this side wasn't taken out in the market. So it was just like the market coming back to that place. Then got some little kind of rejection candles in this place. Then from there, the market is rising again. So that's the sign that what I thought in the market is actually working, and you can apply it on your trading and get to make money, guys. So I think that's all for today, and see you in my next video, man.